Yeah. Real quick before we get to that, I did mention, or Kevin, you did mention the news that just came out during that conference that's still going on right now. NVIDIA CEO says total addressable market for accelerated computing could total $250 billion per year.
They keep 90% market share. Do the math.
That's 4 years, and you got $1 trillion in total addressable market, which he stated earlier. So there is the caveat that Jenny and I were talking about, that they didn't change that $1 trillion. Maybe they did now with that, but.
First of all, mention buzz is building, up 15% year over year and rebounding from its 2023 low. But more importantly, what you see on the screen right now is the happiness level, consumer happiness level, 77% positive, which is 13 points above its next closest peer. In other words, while everybody else in the discount retailer space is pretty much disappointing consumers, Five Below is doing a very good job of keeping those customers happy. And it's something that the company has talked about pretty regularly, is that the move to their Five Beyond brand has really helped their relationship with their customers. I think it allowed them to get out of the pricing pickle that they were in and focus more on value and kind of the fun of discovery shopping. And so the Five Beyond brand really brings that to the customer, and it's shown great results. The CEO even talks about, how much more likely someone is to come back into the store if it's a Five Beyond brand, which is now over 50% of its store count. So I think they've made a move in the right direction. They are focused on the customer experience more so than they are on strictly the pricing experience. And I think that differentiation has put them in a different category than the other discount retailers. This is kind of the category for the somewhat more affluent, discovery type of fun shopper more than it is the necessity type of shopper, which we see at the other discount retailers, which is struggling.
Andy, this company continues to amaze me. 2018, they had 650 stores. By mid-2023, 5 years later, they had over 1,367. So they doubled in 5 years. The stock went from 100 to 200 in 5 years. It doubled. And the CEO comes out and says, we're going to double again in the next 5 years. So they're going to go from 1,300 to 2,600. But here's the stat that everyone's got to listen to, Andy, and I want to hear you comment. Their initial investment to open up a store is $400,000 around it cost me. The first year open, the average earnings is $550,000. So they pay for themselves in the less than a year. They cover the cost of opening the store. How could they not keep expanding?
Yeah, a lot of times we put a lot of complexity into analyzing businesses, but when you put it that way, you can outlay $400,000, and in the next year you're going to get back $500,000 plus.
Yeah.
Let me know when to stop hitting that button.
Yes.
Yeah. And that's pretty much all it is. I think you just keep expanding until expansion stops working. By the way, at the same time, I think that they're also doing, simultaneously, concurrent in parallel with that, what they're doing is they're making each store's experience better for the customer, making those customers more likely to come back to that store, making each store more valuable. And so they're expanding the number of stores. They're making every store more valuable. They're learning from the stores that they have open so that each new store that they open up has that advantage of what they've already learned. And so I think Five Below's kind of caught that flywheel of growth that you love to see from a retailer. They've really got the model, and now it's just a matter of, executing expansion. One of the kind of places most retailers would love to be someday, and very few achieve it.
Yeah, I was kind of parlay that into the discussion about the happiness levels, because that's one of the things I look at these discount retailers. If I were to ever go into one, I haven't been into a Five Below. I got to do some recon.
It's a toy store.
Yeah.
That's what it is for young kids.
I got to do some recon here, Andy, but the happiness comparison chart that you guys have, just off the charts at this point. But now you look at some of the other names within the space, Dollar Tree, Dollar General. Dollar Tree is going to start closing stores. Is that part of the issue that, hey, Five Below is able to manage maybe that customer a little bit better because they haven't expanded their footprint as much as maybe some of the other discount retailers?
Yeah, I think so. And they lean on a different type of customer, like Kevin just alluded to, But, Five Beyond, Five Below is a place you go in. If you're, a teenager, young adult, you want a new phone charger, they're going to probably have one in there for $3.50 or $4. And then on the back wall, they're going to have a cool T-shirt that you buy for $12, and you walk out of there for $25, and you feel like you just robbed the place, and it feels really good. Whereas, Dollar Tree, Dollar General, their customer base is a lot more necessity based. They're walking in there a lot of times for, the toilet paper, the home goods, the some of the grocery items that they might need. It's a totally different attitude and experience. And so when you have a different attitude and experience from the customer's point of view, it's a totally different fulfillment mechanism. And fortunately for Five Below, they kind of have that customer that they can expand upon really easily. And it seems like they're executing on that through the Five Beyond brand, which is kind of taking over the company.
Yeah, real quick here, Andy, do you guys have an earnings score going into this one? Because it's still down about 3% so far in 2024.
Yeah, we think it's about where it should be. I think you can be a little bit bullish going into this. I think you can be quite bullish if you're thinking long term. I think the downside risk is limited on this. I just don't see a huge catalyst to the upside other than the fact I think that they'll come out and report that they're clearly outperforming peers and that they expect that to continue in 2024.
All right, great stuff. Great data. As always, Andy, have a great day.
Thank you. You too.
All right, that's Andy Swan, co-founder at Bawlb. Before we get into this trade, Kev, guess what just went positive? NVIDIA.
Of course it did, because that news is significant.
Right, yeah, up 0.3% now, NVIDIA shares. Now you've got S&P 500 up about 0.25%.
And NASDAQ about to go positive.
Yeah, NASDAQ about to go to positive also. So this might be that turnaround day. We'll have to wait and see. Still got the Fed tomorrow. Now let's get into a discussion about Five Below. They don't have weekly options, Kev.
And look at the float.
Yeah, 55 million.
That is wafer thin.
Yeah, red lights on that one. Option market's pricing in about a plus or minus $12 move in the shares. Without weeklies, how do you want to look at this one?
Yeah, so what I looked at here, right, a big key, no weeklies. So what do you got to do there, Tom? I looked at the expected market maker move, but I went to the monthly move as well. And that's almost $20. So
for April, right?
Right,
yeah.
For April. So you have to be cognizant of both. It is a higher volatility. So I did something in the calendar spread, but I wanted a little more juice, a little more delta. Well, that's what I mean when I say juice. So I took that higher implied volatility, and I did the diagonal. I just gave it about a 31.5 delta, Tom. I went out to July 19th. So I went, I gave myself some days here. I went out 122 days. So this is something more of a serious diagonal. It's not a stock replacement because you're right at the money with your long, but it's certainly got some time where you can chip away at that net debit, Tom. So I went in and I bought the July 200 call, sold this month's April 220 call. So it gives you a nice cushion on the upside. Now, because you went 122 days out, that eyeball test doesn't look good on Five Below because you're paying $17. Now, you can lighten that by moving that up closer to expiration if you think this is going to happen quicker.
Right.
But you can also leave that there and just keep extending duration on the short side. You can do one of two things, Tom, to make this a better trade or less expensive. Move the long side up or keep moving the short side down as you go through time.
Right. Yeah, the June, if you were to buy the June 200, sell the April 220, that's about $15.20. So
1 month save you about $2.
Yep, exactly. All right, let's break this one down. It's diagonal spread kind of fits into the narrative that Andy just gave. They're, slightly bullish, but longer term, and Kevin, as he mentioned, 122 days in this one, buying the 200 strike call out in the July monthly, selling the April 19th strike, 220 strike, $20 wide bullish call diagonal to the upside, paying $17. Apex of profitability at or near that 220 strike. Your risk on this, $1,700 per spread, but that would be far below the 200 level on this one. Break even, about 204 on this one. As you get closer to April expiration over the next 30 days, 31 days, you'll get to potentially roll that to May, maybe June, collect credits, increase potential profitability. You have some assignment risk over the next month into that April expiration. But Kev, when you look at this, you're paying less than the width of the diagonal.
Yeah.
I think that's key. and you're buying a cheaper implied volatility level than what you're selling going into this earnings report.
And two things. And giving yourself 122 days is going to cost you, right? That's one of the trade-offs. You can move that long strike up if you think it's going to happen quickly, but this gives you duration. The other thing, Tom, only 655 options have traded so far today. Be careful with liquidity in this name.
Yeah, price discovery when you're putting orders in might be warranted in a name like this, but a good look at that call diagonal if you think this thing's going to go up over the next, 4 months or so. This is a longer duration trade that we got brought to you. All right, let's take a quick break. When we come back, take a look at Microsoft. The tech giant has risen another 11-12% so far this year and is close to all-time highs. Fast Market's coming right back after this short break.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Microsoft, let's bring in Kevin Green, Senior Markets Correspondent here. Kev, you can't keep this market down, not when NVIDIA is releasing some good news like that. NVIDIA turns positive. Market, all 4 indices now positive.
Yeah, definitely. I mean, we actually did see that turnaround story here, and it's not only just NVIDIA. We have several other news items to kind of go over here, but let's talk about the macro environment first and foremost. We had that news from the BOJ yesterday and overnight that really didn't rock the markets too much, and we did see some positive strength when you're looking at the broader sectors as a whole. Today, this morning, starting off the day, we saw the information technology as well as communication services sectors really lag the broader market, even though we saw some strength when it came to industrials, the energy sector, as well as healthcare. And now we are seeing this turnaround when it comes to the technology sector because of the NVIDIA news regarding the total addressable market. And then also from some news from Meta as well, getting some news around them actually bringing on the Mustafa Suleyman, which is a DeepMind and Inflection co-founder, and he's actually joining the Microsoft co-pilot team, and he's going to be the EVP and CEO of Microsoft AI. So a lot of this artificial intelligence news over the last 30 minutes has definitely turned around this story for the marketplace here. Let's see if we're going to be able to hold throughout the close.
Yeah, Kev, when you look at this, you know, it's a tech story, but Kevin and I were mentioning energy was leading today, consumer discretionary, utilities. You know, that seems to be, you know, that area that people aren't getting out of the market. They're just rotating in on a daily or an hourly basis. It just seems like they want to be in the market. They want to be in risk assets, and they're just rotating when they want to get out of one specific sector.
Yeah, definitely. And you're talking about a really strong correlation between interest rates in those sectors. Utilities have a very, inverse relationship, to say the least, because of the dividend yield that they can provide. So we are seeing some flows going into the utility sector. Energy in itself, we are continuing to see oil move to the upside. Actually did touch briefly $83 to date in the session, which is a remarkable thing to say the least here. There is some resistance sitting at 83.33. But Tom, what I will say is that keep on your radar at the top of the hour. We do have the 20-year bond auction. We do know that the 10-year was not that great. The 30-year was fantastic. We're right in the middle here. Let's see if demand's going to be there. But if we have a decent auction, we continue to get this good news flow. I mean, we could continue to move higher going into the Fed, which is going to be a good situation for the bulls in this marketplace.
Yeah, it's odd, you know, maybe 5 years ago, nobody was looking at these auctions.
No.
Now they could sometimes cause some volatility on an intraday basis also. All right, great stuff. Thanks to Kevin Green, Senior Markets Correspondent here, breaking down stocks and a couple of the tech stories. Now let's bring in George Tillis, Senior Markets Correspondent here. George, we're talking Microsoft. Kind of wanted to hit, you know, names that might be affected by NVIDIA and their new chip, the Blackwell GPU that's coming out. You know, they announced a bunch of partnerships. A lot of their partners were in the crowd at this event. I think 17,000 people at the hockey arena out there. What's your take here on Microsoft?
Well, my take on Microsoft is, I don't necessarily look at Microsoft as a direct competitor to NVIDIA. I think NVIDIA, if you think about their technologies, is really an architect of hardware across the entire AI space, and Microsoft obviously participates in that, with them actually being one of the co-founders of ChatGPT. And so I think Microsoft is just well positioned, and they've been executing exceptionally well as a company across all their businesses. If you look at even their last reported earnings, they talked about how their commercial enterprise division was up about 17%. Cloud growth is still growing sequentially, about 22%. While at the same time, their office and productivity solutions business is also growing in the double-digit range, and the company's just continues to execute extremely well across all of their enterprise space as well. So I think at the end of the day, there's been challenges in other, of course, large cap technology names like Apple, and I think it has to do with the fact that there's so much China exposure for that particular name. But I think at the end of the day, you have to think of Microsoft as an AI interface-based company versus essentially an architect of hardware for artificial intelligence. And I think that's essentially where Microsoft is well positioned.
George, this is a company that defies gravity by their ability to keep growing. But you take that whole suite of products that they offer, you add AI to every single one of them, or most of them, they get a lot better. And now what AI is doing to Azure is revenue growth for Azure last year up 30%. AWS revenue growth 20%. Google Cloud 26%. Now they're starting to dominate cloud, and that is just by 2030, $2.4 trillion in cloud. I mean, they continue to innovate, and somehow, George, they continue to find ways to grow.
That's the thing. I mean, this company is a monster. And if you think about the nature of just cloud storage, obviously Amazon leads with AWS and cloud storage, but second best to that is Microsoft, but they're able to vertically integrate all of their technologies within the cloud, and Amazon can't do that. And so I think, I look at Microsoft as a leader in cloud because they're integrating all of their suite of software and services within the cloud. They're the second largest public cloud out there. And then adding to that the productivity elements of artificial intelligence, which can be very well integrated easily into all their software. So, I mean, they're effectively a monopoly. I'm not going to declare that, but that's what they are, especially in the enterprise productivity software suite. and they're just a giant. And effectively, the profit margins are very robust at 30%. Their growth is still relatively stable considering its 5-year average in the low teens. Earnings growth is in the mid to high teens, paying a dividend. They have about $81 billion in cash on the books. They've been buying back shares. So all of these variables just put together add up to a stock, which, in the last, 7 or 8 trading days, we saw a huge volatility in the $1 trillion club like NVIDIA. Companies like AMD, they pulled back in the double digits. Microsoft pulled back a little, but if you look at the chart on a weekly, it's like nothing happened to the stock. And that just speaks to the position this company's in and the needed aspects of their technology. It's ubiquitous across, all enterprises, public and private sector, governments, households, personal computing, you name it, they're in it.
Yeah, and it didn't hurt that NVIDIA announced last night at their AI event that they're expanding their collaboration with Microsoft. 365, Azure are going to be the first ones on this Blackwell platform at this point too. So maybe some more upside in this one if you're thinking that way, that it's going to expand their business even more. All right, great stuff. Thanks to George Tillis, Senior Markets Correspondent here, breaking Microsoft down. But Kevin, I wanted to kind of highlight the fact that the stock's up 55% from year-ago levels, up about 12% so far this year. It's followed its 50-day moving average up to the upside. It's got earnings on the 30th of April. That could be a stumbling block or maybe a tech sell-off, and Microsoft's not immune to a pullback in tech.
Or being in 3 of the 4 indices if there's a global sell-off.
Yeah.
Microsoft will get hit. It's just, no matter how good of a company you are, if there's a global sell-off, Microsoft will participate. That said, like George said, I can't say it better than him. This thing's a beast.
Yeah, it is a beast. That's why it's the world's biggest market cap company by market cap. This is one of those names that doesn't have a problem with share float. 7.4 billion shares outstanding in Microsoft. So I looked at a strategy that avoids earnings here, Kevin, but still gives you upside exposure. But I did something a little bit different, a little bit more aggressive, where you're going to pay a little bit more. I looked at the April monthly cycle that expires on the 19th, so 31 days to expiration. Buying the 415 strike call, that's about $6 in the money. And then against it, sell the 430 strike call. Now, the all-time high, just under $428 a share, and that was about 2 or 3 sessions ago, Kev. So maybe if we get back up to those levels, this is the type of strategy that works out. Now, $15 wide bullish call vertical. We've got a 740 debit is what you're paying. I believe it's 780 now. Stock has moved a little bit higher. The
whole market's rallied since we came on the air.
Yep. But if you pay $7.40, there's your risk. $740 on a $15 wide call vertical to the upside. Break even, $422.40. We're about $1 from that right now, so you don't need a massive move to the upside. But this one, Kev, you're buying that higher delta call on the 415.
Buying it in the money call, selling it out of the money call. So this is like a covered call, but it's with options. Right. And you're all in the same expiration. So a little bit of negative theta, but if you're right, you get an exponential winner here. You get 100. It looks like 14, 15, almost 100% winner, 90% winner if it moves back up towards its all-time high and above. So, this is a bullish play. If you look at the Analyze tab, it's got about 23.5 deltas. It's a bullish play, hoping that Microsoft goes up towards its all-time high.
Now, what would you say to somebody that would say, oh, hey, you're capping your upside by, it's nearly a double if it goes above 430 at expiration. Yeah. If somebody says, hey, why do you sell the 430? Just buy the 415.
100% that's the case. However, very romantic thought. Just doesn't happen very often.
Yeah, it'd have to be a new all-time high. You want to offset some of your costs. Maybe try in that baseball analogy. Try for a single or double. Yeah. Not swinging for the fences. All right, Kev, that's going to do it for you and I today here on Fast Market. But download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Stick around. Next Gen Investing is coming up.
Knock, knock. #1 broker here for the #1 hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Alongside Alex Coffey. And Alex, before I even say anything, what's amazing to me is NVIDIA is now positive on the session. I believe, if I'm seeing that correctly, now, yeah, we're up 0.7%. So, of course, now the rest of the market is higher.
Yeah, there's a really, really strong correlation right now between NVIDIA and the S&P 500, 0.94 over the last 30 trading days. So as NVIDIA goes, largely as goes the market. Makes sense. Big company, lots of volatility, so much sentiment at the moment driven by that stock's performance. Yeah, recovering from an intraday low, looks like right around 850. So still not testing those levels that it went to in the recent move that we had seen lower around 840, 841, that range. So another strong bounce from NVIDIA here intraday. We'll see where things shape up. This is just such a volatile stock and such a volatile space right now.
I know, I was second guessing what I was seeing because I just talked about this stock less than an hour ago and we were down still 1.5%. So it just goes to show as NVIDIA turns around, so does seems like everything else. But we'll kick things off as always on our show with upvote and downvote. We'll be revisiting all things NVIDIA right to kick off this show. And then we will be looking at FOMO today, which is Bitcoin, which is one area of the market that's actually holding lower, although in real time, I'm watching Bitcoin futures also inch higher off of their session lows, but that's impacting names like Coinbase, MicroStrategy. We'll dive more into those, and then we'll look at the latest with the proxy fight between Disney and, of course, Nelson Peltz. We're getting some good backing from Disney by a pretty influential character at Disney, that being George Lucas. We'll also look at Netflix. We'll close things out here with under 30 D-Local shares lower after some disappointing earnings.
Yeah, a lot to get through. Looking forward to that conversation towards the end with George. We'll look at a company we haven't talked a ton about, get a look at it post-earnings. A little bit of a semiconductor conversation for Upvo Downvo, which we'll get to in just a second. And then, of course, looking at Coinbase, but really crypto as a whole for FOMO, as a little bit of a crack in Bitcoin. We'll see if that has ripple effects that are lasting or not, or at least have the discussion for FOMO there. Let's do Upvo Downvo, though. Not endorsements, not recommendations. This GTC stuff kicked off yesterday, Jenny. Kind of a situation, makes a little bit of sense to me, which is not really anything new or I guess surprising was heard from it. So kind of nothing really happening in terms of the stock price post this announcement.
I know. So amazing enough, we saw shares down about 2% off the open here. So everyone, then you start seeing like the feedback of, was this disappointing? No, it was not. It just was exactly what the street had been expecting, I think. So like what you said, Alex, it feels very reminiscent of every time we hear from Apple unveiling their new iPhone and shares are down, because when the market is so expectant of some of these technologies, we just don't see much of a reaction. They did introduce their next generation GPU architecture known as Blackwell. That's their B100 and B200 GPUs. They're 2 times the size of their precedenter, being the H100, and they are 40% higher pricing for the overall architecture relative to their previous iteration. But they do expect the AI performance specifically to be 2.5 to 5 times greater than the H100. They also did unveil this next generation super chip, which is the GB200, and that is the successor to the GH200. But more notably than that, they mentioned they're becoming less and less of this mercenary chip provider and more of a platform provider like Microsoft or Apple, in which companies can build their software on. So they did unveil NIM, which stands for the NVIDIA Interface Microservice. That's their enterprise software subscription, which just gives investors and overall, I'd say actually the companies that are already in existing contracts with NVIDIA, more of a reason to stay. So I saw nothing but positive. I listened to the keynote last night, and I will say that it's like amazing. It feels like a concert because like the energy, I wasn't even there obviously, but the energy of that place is outstanding. And the fact that they're able to say that they're implementing AWS, Azure, Alphabet, and Oracle, and like notably so, is kind of amazing.
Yeah, my thought is though, is this news to Oracle, Microsoft, or Amazon? So who exactly is learning from this? Those who needed to know already knew. And in this day and age, just this stuff leaks out. So to me, this seems like a whole lot of already known and kind of a non-event. We'll see where things go from here. Hey, anything that can boost the sentiment of the market right now, it wants to hear. It's got 2 ears listening for positive news. And even when it's negative, it's still positive. So that's the nature of bull markets and uptrends. Things can be spun any way you want them to.
Exactly, and I think that in real time, watching this turnaround speaks exactly to what the sentiment I thought maybe should have been. But again, when you're pricing expectations so high as we have been for NVIDIA shares, things tend to initially disappoint, but not looking too disappointing here. But next name today, Supermicro. You talk about a stock that has risen on the year, but has seen some pressure this week. They did see some selling today related to announcing this proposed public offering. They've announced the launch of these proposed underwritten registered public offering of about 2 million shares of their common stock. The company expects to grant the underwriters a 30-day window to buy an additional 300,000 shares. But still, shares have rallied about 220% off the start of this year. We've fallen 27% from highs, but we're still up off of lows so substantially. It's been incredible to watch. But that inclusion in the S&P 500, now you're in the big league. So we saw some selling yesterday, followed by pressure that has remained today.
Yeah, I think we should see more of this. Well, who knows if we will. This makes a ton of sense to me. You can raise a ton of capital. If you think about it, it's like a $900 stock thereabouts. 900 times 2 million is what? $1.8 billion. That'd be cash in their pocket, as opposed to what the trend has been, which is these companies spending their money on their shares at all-time highs. This is a company effectively selling their stock at all-time highs. So I like to see it. They had basically a tremendous opportunity to do this when you see a chart like that behind us. So yeah, it dilutes the share position a little bit for existing shareholders, but what do they have to complain about when they have that chart that they've been potentially long? So I think it can be a win-win. And of course, this is just another day in SMCI. You just said down like 25% from highs, up a huge amount year to date. It's a volatile stock, so 10% swings are sort of just the norm. And then if you slip in there, hey, we're also issuing shares, we're going to collect some cash, really can change the financials of a company. It's an opportunity that not very many companies have.
You're absolutely right. When you're up 870% off of lows, I do feel like 10% move. I mean, we could see some give and take at these levels here now. But our next name today is AMD, which was also initially lower as a result of the NVIDIA GTC last night. We saw shares somewhat lower pre-market, post-market. Now we're holding on to a loss of about just over 4, I mean, now almost 5% here. But they did announce their adaptive computing technology was selected by Sony's Semiconductor Solutions Division for its automotive light detection and ranging, otherwise known as LiDAR. For these projects, the companies will be working together on a LiDAR product for autonomous cars, per a statement we got from AMD, but not really any financial terms of this disclosed. But doesn't seem like we were able to excite investors, although this name is still up 86% year over year, and it's risen 22% year to date. It feels like what we've deemed as like the two-horse race between AMD and NVIDIA. This name is just nowhere close to NVIDIA as of this year. I mean, I know we've risen this year. I don't want to discount that, but just sort of now, NVIDIA has fallen into a league of its own, and I think it's been that way now for a few weeks.
Yeah, 5% decline. Obviously, it's starting to get into an area that it had seen some trading at its former high. So we'll see if it maybe can find buyers coming in. But diverging from NVIDIA a little bit intraday, diverging from the market a little bit intraday. But this is a stock that was over $200 a share, and it's fallen quite substantially at a short amount of time. So this is the game that you're involved in if you're trading these stocks. As fast as they move to the upside, they can quickly lose ground. Doesn't mean that they're establishing a new trend or not. We'll look at the technicals, but it does show that there are risks to these trades. It can go up and go down, even if the trend still moves to the upside.
Exactly, and I think that is what we're seeing right now, the tiers of AI. I mean, AMD, I think, is falling into the second tier because NVIDIA is just now still clearly in a tier of its own. But last name today is another name that's risen substantially over the last 12 months. That's Taiwan Semiconductor. It's up about 50%, and it has still risen about 30% this year. However, some news we're getting, I mean, this has been a continuous story, but that Taiwan and Intel continue to encounter these unexpected hurdles while building out their supply chain in Arizona, per some construction relays we continue to see. Their suppliers had committed to establishing their facilities in the state following the announcement of this multi-billion-dollar investment. However, plans have been paused significantly or already significantly downscaled due to these construction costs and labor shortages, as well as operational challenges. So the cost of establishing a plant now in Arizona has reportedly increased 4 to 5 times what it would be that in Asia, with some executives stating that expenses are several times higher than they initially expected. So for example, we've seen companies like LCY Chemical reconsider then their speed of their U.S. expansion just because of the added cost. So I think that this is also a bigger story when it comes to supply chain issues. I don't think it's necessarily specific to that multi-billion-dollar project that they're building together, but we are seeing some pressure in both of these names. And I will say, Intel actually looking far worse off than Taiwan Semi, as we're down 18% from their 52-week highs and down now lower on the year.
You don't want to oversimplify things, but it does seem like if there's some sort of project announced, it's like multi-years, you just got to assume it's going to take longer and it's going to cost more than initially thought.
Right.
That can be something as simple as your college announcing a new stadium. It can be as something like the Chicago Bears announcing a new stadium, or it can be TSM announcing that they're going to build a plant in Arizona. It's going to take longer and it's going to cost more than you said initially. And this is why I don't get so excited about these 4, 5, 6, 7, 8-year plans. Look, I'm trading off of 30 days, option cycles, things like that. 5 years is an eternity in this trading world.
I completely agree. It's funny. My mind also jumped to like the Bears Stadium fiasco, because it does seem like these things take a ton of time. Not shocking, but we are not seeing this exactly fuel any optimistic sentiment today around Taiwan Semi. But we'll be looking more at AMD as well as super microcomputers, names we just haven't discussed very frequently on this show as far as the technicals go. We will also be looking at some example trades as always. Stick around. Next Gen Investing will be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
There's no place like the New York Stock Exchange. We've got you covered. The biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalides, 2 p.m. Eastern on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chartmaster segment. We're diving into our 2 upvoted names, Super Microcomputer and AMD. So here to break down the technicals for us is our Chartmaster today, Ben Lichtenstein, the host of Futures. So Ben, we talked about this name yesterday. We're following up because, well, we have seen some pressure this week. It's still been phenomenal to watch Supermicro this year. I mean, we're up over 220% year to date.
Yeah, SMCI shares are coming under pressure here today, and I wanted to start first and foremost looking at recent price activity with the more granular look right here at this 30-minute time frame, a bit of a snapshot at some of the recent price activity, because this is the first time in a while, to Jenny's point here, that you can really give any credence to the bears here and some of the selling that we've been seeing. Taking a look at the chart here, I wanted to point to, well, the move lower here, just over the last couple weeks. We were talking about from 1229, that's where we topped out, and you can see how we've come off. Along the way here, I went ahead and overlaid some of these areas of consolidation on this chart where the market has paused and kind of regained composure. Look at this in a very systematic approach. Every $100, the market kind of takes a breather here and just sort of consolidates. It goes sideways. Currently balancing right around the $900 level. So with the working assumption that trend is your friend, continuation more likely than change, the bears are looking for another move lower here and value to form at a lower level. That would really kind of solidify the working assumption that this trend lower, again on the 30-minute time frame, is still valid. Now, currently balancing around 900. Take out 1,000, that comes into question. Now let's show you a snapshot of what's going on here as we take a step back. This move that we just looked at is this move lower here, right? Off that high, we talked about 1229, again to current levels. And you can see a couple of those areas that we talked about, 1,100, 1,000, 900, where the market paused here. But what I wanted to point out with this longer term chart was that the trend actually had been to the upside. Now, before the break, I heard Alex talking about some of the selling we've seen. And I heard Alex say that some of the selling doesn't necessarily mean that trend up has been invalidated. And that's kind of the way I look at it. This, at the very least, is not what the bulls were looking for, right? They didn't want to see this roll over because while we were balancing around 1,100 here, they wanted to see a new area of value form at a higher level to solidify that working assumption that we're trending higher. Again, this is a longer-term chart here, so we're looking at that longer-term trend going all the way back to the lows that we saw back in January of this year. So again, testing 900, not what the bulls want to see, but let me show you another chart, because I think if you take a step back and just kind of do a fat cran approach towards looking at this, maybe this is one larger area consolidation that's forming. So we may not have necessarily invalidated the trend up. We're just kind of giving back some of the gains. If that's the case, though, still not very good for the bulls, because you've got a lower extreme that we could work our way down to as we've now breached this 890, 895 level. So possibly back down as low as 650 before, again, you even really give up any of that momentum to the upside. But let's take here a look at one more chart, because look at this. This really speaks to the parabolic nature of this price activity. So again, in some ways, maybe that is very healthy for this stock to consolidate at this upper level again around that 900 level, 1,000 maybe, and just sort of slow things down a little bit, but not necessarily give up so much of the ground that they achieved here. I mean, look at this. You can have to get out a microscope to look at this stock when it was trading down around $2 here prior to this, just screaming move up to the upside here.
This is a ridiculous chart. I mean, this is exactly what I think the problem is, that people say, like, what is going on here? This is ridiculous. And all of this has come, like, over the last, I mean, what?
Yeah, since 2023, basically.
2020. This is ridiculous. Yeah, this is like, put this up. And if you're a believer of an AI bubble, I'm not saying that you are, but like, this would make you have some serious pause. So trading this name then, Alex, which I think is an interesting conversation, because obviously it's picked up in volume, it's picked up in price. So I think momentum is to the upside. So how do you lean into some of that?
Yeah, I mean, what makes a bubble? The stock keeps going up. So if you're leaning into that trend, you'd be potentially looking to get bullish on this stock. And so a couple things to think about. A lot of volatility, expensive option prices, and of course an expensive stock price. So what we're looking at here is a way to make it a little bit more accessible, have some asymmetric upside, and look for this stock to retest sort of where it topped out in its most recent ascent higher. Equidistant call butterfly going out to next week's expiration, which is the March 28th, buying one of the 1,200 calls, selling two of the 1,250s, buying one of the 1,300. So it's $50 wide on both the credit and the debit spread side. It peaks out at that 1,250 strike, which is near the all-time high in this stock, but it's done for a 50-cent debit. So you risk $50 for a chance to make upwards of 4,950. So low probability whenever you see that kind of asymmetric payoff for the risk, but also because we need this to move to 1,250 at that expiration next week to get to that max profit. Really anything between 1,250 cents or 1,299.50 cents theoretically at expiration could be somewhat profitable. So to best describe what a trader would look for with this one, Jenny, a big recovery post this share issuance sell-off down to 900. Retest that 1,200, 1,250 range. If that happens, this thing could expand from 50 cents to, say, several dollars, and that would be a home run for this type of a trade. But again, you're kind of aiming in that window with the knowledge that this $50 fully at risk, it might even be likely that that full $50 is lost on a trade like this.
Yeah, and that's a really good point as well. And of course, I think that there's that optimism with the S&P 500 inclusion this week. I am not by any means saying it's a bubble. The chart is just absolutely ridiculous. But now to look at another name that has definitely benefited from the AI craze, but not at all to the same extent. That is AMD, which was 2023 one of the strongest chip companies, and obviously competitors to NVIDIA. Hasn't looked as strong, though, on a year-to-date basis.
Yeah, that you'll see when we look at the bigger picture charts here. This, much like shares of SMCI, have sold off as of recent. So you're going to see a little bit of weakness on the more intraday time frame as you look at it, but you'll see on those longer term charts here, as Jenny mentioned here, this is a stock that, while it hasn't benefited to the same extent that some of the other AI names have, it is still gaining momentum and rewarding the bulls here. So let's take a look here. First and foremost, some of the selling we've seen. Now we're going to start off with a 15-minute candle chart, just some of the price activity over the last couple weeks, because this stock, as you can see, was trading up around 227, just shy of 228, and you can see it move back down below 200. Went ahead in a similar fashion as we did with our last example, just applied some areas of consolidation, overlapped some of these areas my eye was drawn to, where the market kind of pauses and sort of regains composure, right? You can see in this instance, we're trending lower. Now, I think this is a perfect example, shares of AMD, of why you got to be time frame specific if you're talking about price activity, right? Because Jenny, you could go home and you're in the elevator headed up to your place today. And if you have a conversation with somebody who, for example, is focused on these tick for tick charts, the more granular, they're like, hey, this thing's trending lower, right? But as you take a step back, you're going to notice here that, well, that selling we just looked at kind of clouds things on this daily trend to the upside, but it doesn't necessarily invalidate it yet because we're still holding up above 170. We always talk about these areas of consolidation that form on the way up to help us determine trend, most recently balancing around 205. Here you can see we're leaking lower. Yeah, again, much like SMCI, not what the bulls wanted to see, but still holding up above a couple key levels, 170 being one of them. Now, another example of why I think it's important to be very time frame specific, right? That other chart we looked at, the 15-minute candle chart, the move lower from 227 to current levels and recently below 200. Let me show you. This is another long-term chart, right? Where if Jenny's like, hey, no, we're trending higher to that neighbor of yours in the elevator, right? I mean, because it's pretty well defined here. I mean, we're going back to all the way back to 2013. You can see three areas of consolidation where the market formed at higher and higher levels, 25, 50, 105, and then you can also see, look at this big vertical move that we've seen here. This is the market here basically seeking value higher. We're talking about a spike up right now. Yeah, very possible that we're about to consolidate at this upper level, and in many ways that would be healthy, exactly what the bulls want to see. And yeah, in many ways, again, intraday trend lower, 15-minute candle chart, weakness over the last couple of weeks, but this is still pretty well defined to the upside, in my opinion.
Ben, if we have someone talking to me about an AMD tick chart in my elevator, we've got big, big problems because that is an after-hours space for me, or after-work space for me. But as far as some levels now you're overall watching here, because we don't really have any major catalysts for AMD. We're in that earnings lull. NVIDIA hasn't obviously served as any positivity for them, at least thus far. We're down about 5%. What are you watching here in terms of big picture?
Well, I think that's a good question, right? Because that last chart just showed the high conviction we've seen to the upside, and we've seen that stopping price. So now we expect to see something overlapping, rotational, some consolidation. So we look to those levels to find areas where we might start to kind of balance around. I'm looking at the 50-day moving average right here as we speak, right around this 181 level. So a key area to watch. You've got the 200-day moving average a bit below that, around 130. You can notice here how RSI is rolling over, but yeah, I mean, just kind of looking at the upper extreme of the last range that we formed around this 170 level. So again, 180 is a key area, and if we could get some buying here, if we could find some support here, I think it would be a real good sign that the bulls remain in charge on this one. The pullback, not what they wanted to see, but not necessarily invalidating that longer-term trend to the upside here. So again, another example is we were talking about with SMCI, the weakness we've seen here on the bigger picture chart doesn't necessarily trigger a sell signal. It's just not necessarily what the bulls wanted at this point.
Yeah, especially to start off this week with now, I mean, AMD faring okay, but Supermicro, 2 major down days after what would have been a phenomenal uptrend. But of course, expect to see some volatility when shares have risen, the way that Ben illustrated from both of these names on that chart. But we'll leave it there. Great breakdown, our chart master, Ben Lichtenstein, today. So Alex, when we trade AMD now, bit of a different story because we haven't had this exuberance, this like really crazy upside, although we've been in an uptrend. So with that in mind, walk us through what you're thinking for an example.
Yeah, not to the same extent. I think you could argue that that's a pretty exuberant chart, though, given its move, all-time highs not that long ago. But maintaining its trend higher, if you followed kind of what Ben went through, looking at kind of leaning into today's weakness as a potential buying opportunity, looking at a neutral to bullish strategy, selling a put vertical below the market. A couple things to consider with AMD, a little bit more accessible stock, a little bit more liquidity than SMCI. I mean accessible by the fact that it's an under $200 a share stock as opposed to a $900 a share stock. So went to the April 26th expiration. That is a little bit over a month away. The 160, 155 put vertical, if you're able to get $1 or more for that, that would be ideal. The $1 credit would correspond to a $100 max profit if these options expire worthless, aka stay above 160 through that expiration. 159 break even, $400 in risk. That risk takes place if this entire spread is in the money. They went through assignment and exercise, offsetting for a theoretical $400 loss. Again, 159 the break even, $100 max profit, 4-to-1 risk reward ratio, so you know just by seeing that it is a relatively higher probability of success trade. You got some cushion of about $20, but on kind of a nothing day in the market, AMD's down $9, almost $10. So it goes to show that although it's $20 away, it's absolutely possible that AMD goes down there. It's actually possible it goes down there and then finishes out of the money too. So you start looking at this, no strikes are really safe in names that are moving as much as these ones are.
Yeah, that's a really good point. I mean, like, aside from some minor developments today, AMD is down about 5% without any major news catalyst. So maybe perhaps NVIDIA is stealing the overall AI spotlight, but we will leave it there for this segment. Now, coming up next, time to talk all things Bitcoin, as Bitcoin did fall to around 62,000 earlier in the session. We've recovered actually pretty substantially here, around 65,000, but still some of this pressure weighing on the individual crypto equities. We'll discuss more what's moving as a result of this down day coming up next.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
And investing, it's time for FOMO, discussing the crypto space. Alex Coffey, Jenny Horn, Coinbase, MicroStrategy, Bitcoin futures, all the rest. There's so many names that kind of make up this space now in publicly traded markets. Not even to get into the fact that there's all the spot products, the actual digital assets themselves. Let's start with /BTC, the Bitcoin future, making a nice little intraday recovery. It's down about 1.7%, but it's had a little bit of a gully, I guess you could say. It's down about 10% over the last week after this really impressive start to the year and run that it's had over the last 12 months or so.
Yeah, and I will say that it almost feels like this pullback seems not necessarily healthy, but like necessary, because we had risen so substantially so quickly, as we just discussed when looking at super microcomputer. But completely different conversation here. A lot of enthusiasm has been so closely linked to the regulation that has been positive for the space, no doubt, but the ways in which it's benefited some of these individual stock names has been astounding. I mean, so in real time, while some of these names were lower on the session earlier today, along with the price of Bitcoin futures, we're recovering a bit here. We're down a little less than 3% in Coinbase. MicroStrategy selling off a bit more, though, but it has rallied more substantially this year. We rallied about 120% over the last month prior to today's open. So substantial gains. They did recently announce this pricing of their convertible senior notes offering. So they did announce this pricing of around $525 million worth of around 0.875% of their convertible senior notes that are due out in 2030. They also said they plan to grant the initial purchasers this 13-day option to purchase an additional around $79 million worth of the notes. But that offering was expected to close on Monday. So we've seen some degree of pressure, but overall they plan to really use these proceeds to buy more Bitcoin, about $515 million worth. So I think that that's a strategy that has seemingly worked out well for them. Of course, nothing has helped more than some of the overall strength of Bitcoin. As we talk about the correlations, the way actually Coinbase trades less strongly with correlation to Bitcoin. I can't say there's obviously no correlation, because there is. It just isn't as strong as historical trends would tell you. But overall, analysts are still fairly mixed on some of these names, I think, because of the substantial run-up we've seen. Looking at Coinbase, it's actually a bit less favorable than MicroStrategy. We have 23 analysts, 9 buys, 10 holds, 4 sells. And MicroStrategy, we have 4 analysts, which all 4 are buys. But I mean, that doesn't exactly, to me, illustrate, like when you're comparing 23 analysts versus 4, just a smaller sample size. But Coinbase right now, actually, the average price target is 190, so that implies some downside from where we closed Monday. So they've also benefited from the recent crypto rally. Stock has risen 25% roughly year to date. But I think when you're looking at a name like MicroStrategy versus Coinbase, Coinbase is at least more stable. I know we're down 3% today, but MicroStrategy is like all over the board.
Yeah, I don't know that they're super comparable. They're in the same space, right? Coinbase is sort of the business of cryptocurrency or digital assets or Bitcoin or however we want to determine the space and what we want to use for it. You know, they're providing access to these products and they benefit from there being excitement by them, right? More excitement means more volumes. I'm sure they have, potentially some inventories as well of some of these different items and other ways to make revenues within the space. I've never pretended to be a digital asset expert. There's so much, going on within this space that makes these things a little bit more nuanced than, traditional securities. MicroStrategy, though, is like a levered Bitcoin play. I don't think we ever would be talking about MicroStrategy because of its core business. Although it does have, of course, a business beyond just owning and holding Bitcoin on its balance sheet, but it's literally issuing convertible debt to buy Bitcoin. So this is, we're borrowing money if you're MicroStrategy to buy Bitcoin. So to me, this is levered Bitcoin play. It explains why it's more volatile than even Bitcoin itself, because they have debt outstanding that they've used those proceeds to buy Bitcoin. So if Bitcoin goes down, they're going to be underwater on those positions. And of course, they have outstanding debt that basically they're going to be obligated to pay back. And potentially the money that they used, they would have lost on Bitcoin. So it makes sense that it's going to have more kind of swings associated with it. But it's a tough stock to trade with that high price tag when you look at kind of the options world and things associated with it. So just depends on kind of what your risk tolerance is and what you're looking for in a product.
Yeah, and I would say that, well, we do see, definitely it's heightened trading volume interest in both of these names, where Coinbase is convinced. I mean, I at least like that they're able to, post consistent earnings. Like, you see fundamental strength from the recent run-up we've seen in Bitcoin. You also see that, unfortunately, on the other side of the coin, that they are facing some still regulatory scrutiny from the SEC. So that's also a pretty near-term risk. But if you're a crypto believer and you're an optimist in this space, you'd have to think that one of the overall, basically stocks that's in so many of these various funds now, I believe it's in 10 of the 11 of these spot Bitcoin ETFs, is then seen as at least somewhat of a proxy. I know the correlation is all over the place, but hey, we're lower today in Bitcoin, we're lower in Coinbase. It seems like that's usually the case. So when trading now, Alex, and considering looking at a more stable of the two being just Coinbase, and like you said, just a bit more easy to digest given its volatility, how do you think about trading the same? Because you also have to then have a pretty strong conviction in Bitcoin and cryptos. Yeah, and I guess to kind of clarify, it's not that it's less volatile or more stable. It's just in my mind, and again, this is just one thing. This is just a thought experiment. It doesn't mean that it's the right answer for everybody. Everyone's going to have unique circumstances. MicroStrategy is essentially just holding Bitcoins. If I wanted to invest in Bitcoin, why would I go to a company that's buying them when I could go to one of these funds that you're describing, or perhaps even directly to the product itself, perhaps the futures market? Now, there's complexities to all of them,
Coinbase is a business that is, basically capitalizing or profiting or potentially profiting from making revenue from this industry. So I don't see them as in the same camp. And then you look at a $231 stock price, makes it a little bit easier to trade if you're a retail investor versus the MicroStrategy $1,426 price tag just makes it a little bit more difficult when it comes to some of these strategies. So looking at Coinbase, this is sort of going to be deja vu compared to what we looked at in AMD. Looking at selling a put vertical, same expiration, April 26th, and it's going to be the 185, 180, looking for, again, a dollar credit. So 4-to-1 risk-reward ratio, 184 is the break even. Can make $100. You're going to be risking $400 on this one. Looking for this downtrend that we've seen kind of unfold over the last 5 trading sessions in Coinbase to kind of stop, resume its longer term, medium term, super long term trend, which has been really impressive over the last months, several months, and even years at this point. When you're looking at this stock, though, because it has so much implied volatility, 90% implied volatility, you're able to get all the way down to that 185 level, despite the fact that the stock itself is trading 230. So it moved around. And this is a way to kind of create the risk profile that you want in a name. So that's what I like about some of these option strategies, Jenny, is it kind of equalizes the volatility, if you will. Your kind of playing field then can risk $400, can make 100. In this case, you can always adjust those to get a different ratio there, but it's not going to be as subject to the swings because you have defined outcomes.
Yeah, and that's also a really good point. And yeah, not to say that one is more stable, again, either. I feel like that's the wrong word, but we did see their market cap last week surpass that of PayPal. So it's like they're becoming still like a formidable player in this space. I am not sure if you could say that a company that's just buying Bitcoin since about 2020, like MicroStrategy has been doing, is necessarily like a pure play into the crypto world. But also important to keep in mind, we do have this halving event in April, which is when we see Bitcoin mining reward become basically half to limit the overall supply. So that could be a near-term catalyst to look out for, but we will leave it there for FOMO today. Coming up next, we'll talk all things the entertainment sector. Some news in Disney today, sending shares up about 1%. Netflix is modestly higher here with some analyst coverage. We'll discuss that more coming up next.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes on Morning Trade Live on the Schwab Network. Weekdays at 9 a.m. Eastern.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. Alex Coffey alongside Jenny Horn. It's time for Developing Story, and joining us here in studios, Renita Young, Senior Markets Correspondent for the Schwab Network. So Renita, we're going to talk some Disney. Disney's had sort of this very public kind of power struggle going on, and the current leadership got a pretty notable endorsement, I guess.
Absolutely, from one of the biggest individual shareholders of Disney. We're talking about George Lucas. He's throwing his support behind Disney and Bob Iger in this really bitter, really long, really expensive proxy fight that it has against Triad Partners and Nelson Peltz. And he actually has voted all of his shares for Disney's 12 directors that it wants on the board, and he's encouraging other shareholders to do the same thing. Now, brief reminder of what is desired among two of the parties. Disney wants its 12 board of directors to stay put so that Iger can implement his strategy to raise the company's stock price. Triad wants to nominate its CEO Nelson Peltz and former Disney CFO Jay Rasulo because they want to find a clear successor to replace Bob Iger, but they also want to improve the output from Disney Studios. They also want to boost streaming margins, among other things as well. But George Lucas was not the only recent vote of confidence that Bob Iger and Disney got for the 12 board members that it wants to nominate. Proxy advisory firm Glass Lewis also recommended that Disney shareholders vote for the 12 that Disney wants to have the board seats as well. So we have support coming from several different places now in this very bitter, expensive proxy fight.
I know, so you mentioned expensive because I see this headline and I'm like, oh gosh, it's like the eye roll of a lifetime. It's like a bad breakup that you like can't get away from. But as far as the cost to Disney, what does that look like? Because I have to imagine the longer this goes on, it's not a good thing.
Right. I think about it as a political campaign. I mean, is that not what it is? And it's costing them somewhere around $70 million to continue to reach out to shareholders. And that's including these social media blitzes that the company has as well, and whatever else that it has to do to convince them to vote the way that they want them to.
Yeah, and I would look at this, I guess, too, Renita, as a company that's been struggling, clearly. I mean, it's down 40% over the last 3 years, despite its attempt at a comeback here. Sounds like there's a diverted kind of focus at the moment towards this. Like, if you're a shareholder, you want to get through this and focus on making me profitable as a company and bringing me returns as a shareholder. I don't want to have the infighting.
That might be some of the point of one of the folks over on the Nelson Peltz side when they talk about the long-term strategy that they want to employ for the company. They said, yeah, this is cool and all, this fight that we're having, but can we figure out how to bring more shareholder value? Can we figure out how to create bigger and better margins?
Yeah, good stuff. So we'll see where things go from here. Up 1% today, up nicely over the last 12 months, but a long ways to go to get back to where it was just 3 years ago at this time. Renita Young, senior markets correspondent for the Schwab Network, joining us here in studio for the Disney update. Not far away, though. We're going to look to Netflix, and joining us now is another senior markets correspondent from the Schwab Network, Kevin Green, to talk all things Netflix. Why you got your eyes on this one today, Kev?
Well, we are seeing JP Morgan keeping their overweight rating on the shares here with a price target of $610 when it comes to Netflix here. And we just continue to talk about this company and its strategy moving forward. And they are really highlighting that their ad tier monetization has been a windfall for them when it comes to their revenue growth. And they also believe that some of the strategic initiatives, especially around the sports content, could actually gain and continue to increase their free cash flow growth here over multiple years. Now, one of the things they also kind of talk about is their strategic nature and their customers here. It's not only just the United States and Canada. They have seen exponential growth when you're looking at the international markets, and the international markets do not actually provide that much of a margin boost to the company as of right now. But when you're looking at these growth rates, it could be a lever for them in the future to be able to pull them, increase those rates, and that would have a material impact on that top line here. And then one thing that I am kind of noting here, the Jake Paul-Mike Tyson boxing match, and I heard some rumors about this, but I didn't know if this was actually confirmed or not. But it does appear that that is actually going to take place on Netflix on July 20th. And I know that I will be watching that to see exactly what happens here. But overall, you're just hearing about the monetization strategy, their ability to take market share from linear programming, as well as getting into the sports space, which we know on a traditional basis does carry higher ad margins. So that's going to be all tailwinds for Netflix. Seeing the stock up about 0.5% in the session, pretty decent note when you're looking at JP Morgan.
So, Kevin, I love this story. I don't know if I love or hate it, actually, but what I do know is when there was these fights on all the time, in college specifically, they were expensive to go see. I mean, this is something people shell out for. So, not saying this is like, I mean, it kind of is. I'm not saying it's like a Conor McGregor type fight, but they kind of will have those eyeballs based on the fact that it's even reached me, and I am definitely probably not the target demographic, but is there then any risk to them messing this up? Because I believe they tried to do a live event previously, and it didn't go so well.
There's always a risk of having some technical difficulties, Jenny, but one thing I will note, I grew up in the 90s, and you pay whatever you can to watch Mike Tyson fight. Even though maybe the fight only lasts for 1 round or maybe 2, people will pay for it. And so I think he's going to probably bring more attention to the sport than Jake Paul, even though Jake Paul has been doing a phenomenal job when it comes to boxing. But I think there is going to be some tailwinds here for those that just like to see Mike Tyson fight, no matter how old he is or no matter if he's not even actively within the boxing arena here. So I'm looking forward to it. No matter the cost, I'm probably going to buy it.
I think probably same, because I would love to see Mike Tyson come out on top of that fight. I think so would the internet, based on some of the initial feedback I've seen. But we will leave it there. Great breakdown on all things Netflix today. Up modestly about 0.4%. Kevin Green, senior markets correspondent for the network. Now coming up next, it's time for Under 30. We are looking at D-Local, which is lower today and also seeing some heightened volume after overall some disappointing results from the company. George Tillis will have more on that breakdown for us coming up next.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Next Gen Investing. It's time for Under 30. Let's bring in George Tillis, Senior Markets Correspondent, Schwab Network, D-Local, stock ticker D-Low. George, I know we just got some earnings from the company. What did we learn?
Well, I think what we learned here is if you're a small growth company, irrespective of profitability, if you miss on earnings, they'll come at you, and that's what's happening with D-Local today. I did notice also ST&E, which is Stoneco. It's essentially a payment processing company out of Brazil, and D-Loco is also a cross-border payment processing company. They are based out of Uruguay. Both these companies are actually trading down, so I think there's a sympathy play going on with these two companies, considering, again, the market share that these companies are growing in, especially D-Loco. The opportunities for them include, intercontinental cross-border payments, including Africa. But if you look at the earnings per share estimates on an adjusted basis, they only missed on an adjusted basis by a penny. They came in at 14 cents versus the 15-cent estimate. Now, last year, they actually printed about 8 cents per share. So irrespective of the miss, they still generated about 68% earnings growth on a year-over-year basis, with sales, which grew about 59%, beating the estimates of 188 million versus the 169 million. So I think there's some sensitivity in the growth areas of the stock market, and that's where essentially a lot of these smaller niche payment processing companies lie. Companies like DLO and ST&E, which is Sunoco, which is, again, a very similar company that's based out of Brazil, which I believe we talked about on this program. But nonetheless, looking at the stock overall, it's a growth company that's still expected to grow its sales, at least in the next 2 years, compounded about 40%, and earnings growth around 38%. But we are seeing, unfortunately, a sell-off because they did miss on earnings.
So, George, I was looking at even their last earnings picture looked pretty positive. I mean, we saw revenues jump almost 50%, earnings looked strong, and we still saw some selling. So, I mean, it's difficult to then find what the street is really looking for here. Could it be tied at all to, like, their leadership shakeup? We are seeing this new CFO that was announced.
Well, yeah, I mean, that's part of it. A change in leadership, especially at the C-suite level, can be meaningful, at least in the short run. I think there's some sensitivity going on. I think the dollar interest rates have put some pressure on international companies, especially smaller cap companies. Now, this is a small cap company relative to, of course, some of the big ones we talk about. It's about $5 billion. So I think that's, a macro element. Interest rates, the dollar, and again, these foreign countries that essentially have currency risk. And that might be part of the reason we're seeing a sell-off, especially in the last 2 quarters in this name. But, we have talked about other, banks. We talked about NU, which is also a Latin America version of SoFi. That stock has performed exceptionally well, up over 150% over the last year because of growth and profits, considering profits as well. In other words, they're growing with actual GAAP profits, and that's the case here for DLO, because if you look at last year, including the quarter they just reported, they generated about $650 million in revenue, and they generated also from that about $150 million net in unadjusted profits. So they've got positive profits, they've got positive growth, but I think there's some challenges in the market structure that these companies lie in, which is right now in the small cap space.
George, I'm glad you brought up NU, the new bank, kind of Brazil-based, as you said, sort of a new age, almost SoFi-like company. I was going to ask you kind of how they compare, but as you kind of stated, the new NU holding is sort of operating more as a traditional bank, where this is much more kind of a networking company. When you're looking at sort of this payment networking space, we've obviously heard on the macro front kind of de-dollarization chatter, and I think we're probably premature to those discussions. But this is examples of the kind of things that will sprout up, locally to kind of facilitate this transaction. Right now, when in kind of the dollar network, you got Visa, you got MasterCard, you got Amex, you got the PayPals of the world, but locally, there's tons of these companies all around the world. dLocal, just an example of one in Uruguay.
Correct, and that's the point, is you want to separate, again, what's going on with banking, and that's where NU fits in versus traditional payment processing. And dLocal focuses on consumer to consumer, also B2C, in other words, business to consumer as well as business to business. So it's more of a traditional payment volume-based company, and their total payment volumes, by the way, also grew about 55%, which is right in line with their top line sales. And their merchant revenue retention rates, which are paying, DLO, subscription-based service monies, they actually grew also considerably to about 150% of sales. So that gives you an idea that the merchants who are using the platform continue to stick with the platform. And one of the things I've noticed is you're going to find very small companies that are niche companies in their respective regions, and dLocal seems to be the one that fits the Central American market very well. They're also expanding in Africa, and I think at the end of the day, when you think about ST&E, which is another company like dLocal, they're more focused in Brazil. So my point is once there's acceptance, cultural acceptance of a company, there's trust, it becomes sort of the standard. And I'm not saying this is the company that is, the Central American standard, but it might be. But I will say this, looking at the stock, it seems to me, all else equal, there's a little bit of an overreaction considering they only missed by a penny on an adjusted basis. And they are growing considerably. Just to give you an idea, this year their sales are expected to be close to 900 million, and next year about 1.2 billion. Now compare that to 700 million or 650 million last year. That's a pretty significant increase in the next 2 years.
Yeah, and George, I think that growth story to me seems to be definitely more interesting than like a slight earnings miss as far as expectations. I feel like growth and expectations are all the street has cared about, but I guess unfortunately not today for D-Local. We will leave it there. Great breakdown as always, George Tillis, Senior Markets Correspondent for the network, and that'll also do it for Alex and myself for Next Gen Investing. Don't forget to download the Schwab Network app, available on the Apple App Store, and tune in 24/7 on schwabnetwork.com. The Watch List with Nicole Petalides is coming up next.
It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange. Thanks for being with us. Plenty to discuss in today's show. It's Technical Tuesday. Kevin Horner will join us and walk us through the charts for Comcast and AMD. Federal Open Market Committee meeting is underway, and we'll break down what you can expect to hear from the Fed's rate decision, which is due out tomorrow. Last but not least, we'll have the very latest from NVIDIA's GTC conference. And here's a look at the markets. The Dow's up almost 250 points right now. The S&P is not too far off from its all-time highs. The S&P right now is up almost 0.5% at 51.71. It had hit high of 51.89 recently. Last week, right? But now it's at 51.70. You have all up arrows. Everything is turned into the green. The NASDAQ is up 0.2%, and so is the Russell, up more than 0.5%. Oil and gold are mixed. Gold is pulling back by about $4, 21.60 a troy ounce, and oil's at 83.59 the barrel. Bitcoin, 65,090. For some of the biggest stories in the markets, we welcome in Kevin Hanks, Senior Equities Contributor. So we have the big NVIDIA conference from yesterday to today. There's been so much going on. Tell us some details that stand out to you, Kevin Hanks.
Amazing turnaround in the stock today. Got down as low as 800. Addressable market. And CEO Jensen Huang was quoted as saying the total addressable market for the chips that they're now putting out, $250 billion a year, Nicole. Think about that. That's $1 trillion every 4 years. Now, the Blackwell platform that they announced, a 1 trillion parameter large language model, 25 times less cost and energy consumption than its predecessor. Think about this, Nicole. They made breakthroughs in data processing, engineer simulation, electronic design automation, computer-aided drug design, quantum computing, generative AI. Who's going to use these chips? Amazon's AWS, Dell Technologies, Google Alphabet, Meta, Microsoft, OpenAI, a who's who of companies are going to use these chips. They have reestablished themselves as the clear leader in AI and generative AI. It's amazing. And the turnaround in the stock is spectacular, Nicole.
Yeah, I mean, it's pretty amazing here. And Blackwell, as you noted, I mean, even Morgan Stanley saying now they're in a very strong position with all of that.
Yeah.
In the meantime, I know you're also watching the Federal Open Market Committee. We're keeping our eyes on what the Fed and ears on what the Fed may say. Your thoughts?
We've already had moves from the Bank of Japan going from negative interest rates for the first time to positive in 17 years. We've had the Reserve Bank of Australia remain constant at 4.35%. But now, Nicole, now that we're through that, now that we're through NVIDIA, all eyes turn to the FOMC. We'll get the news tomorrow, right around 1 o'clock in this show, and then the press conference, Nicole. And the key topic that everyone should be watching is the dots. What are the projections for where they think interest rates will be the rest of the year? Is it 3? Is it 2? Is it descending towards none? That's the question that's going to be answered tomorrow from the FOMC. It's going to be a big one. Then Thursday morning, we'll get the Bank of England about 8 a.m. Eastern Time. Andrew Bailey will comment on that. So a lot going on here in the next 24 hours, Nicole.
Yeah, without a doubt. Okay. Kevin Hanks, thank you so much. Appreciate it. Now let's take a look at the bigger picture. David Straszewski's with us, CEO, Sound Planning Group. Thank you for being here. I was just noting the market turnaround, and so you're seeing a lot of green. We hit some highs recently. I think we're up to 18 S&P highs, give or take. Your thoughts on this market?
Well, it's pretty amazing that we're at all-time highs pretty much across the board. And if we even look at Japan right now, that has been 34 years since they've gotten their all-time high. And so this is a very important moment for us to be paying attention. And I would just encourage people to, be understanding that what goes up ultimately has some pullbacks and does come down. How significant, when does that occur? Those are things that we can ultimately discuss. But this is certainly a market that is rallying right now. And there's a lot of exciting news here around NVIDIA, which has certainly been one of the big movers here that has made these markets the way that they are.
Yeah, I mean, there's no doubt that the AI craze and tech has sort of led the way and then pulled back, and then we started to see a reversal, or at least a broadening out, I should say, right, where we started to see other sectors gaining. Your thoughts on the Fed? I do want to talk about some specific names, but I do want your thought on the Fed because we'll hear from the Fed tomorrow afternoon.
Yeah, so as far as the Fed's concerned, the last time that they met in December, they were ultimately looking at a pivot. And so if we were looking at a pivot, what has changed now to then? They were looking at 6 Fed drops. Now we're looking at maybe 0, possibly as high as 2 or 3. That's a big difference. I don't think that with this higher CPI, unemployment is as strong as it is right now, that the Fed is going to be able to raise or reduce rates in the way that they want to. In fact, I think that they're very conscientious of the Volcker mistake. And I think that they definitely do not want to make that mistake cut too early. So I think that ultimately this is a time where inflation is influencing Fed policy, not Fed policy influencing inflation. And I think we will see over the next quarter or two how that ultimately plays out.
So, I mean, there's more of a likelihood July, September that we see a cut. Do you think that might come then?
Okay. Here's the thing that the Fed's going to have to figure out. If they're not going to be politically motivated, if they don't cut in July and they do it in September, that'll be the most politically motivated cut in the world's history.
Yeah.
And so I think that they will do a quarter point prior to that. Will they do September as well and say, hey, a trend was established now and it wasn't just politically motivated? Not sure. Here's the big point, though. Will 50 basis points actually make a big enough difference in the world of interest rates, or is the lag effect going to be showing up right now, Nicole? And then we find ourselves, maybe, rallying on these cuts in a way that was not as sustainable because we may not get that soft landing.
So we just covered NVIDIA, which you mentioned, so I'm going to leave that one alone. But I do want to talk about Supermicro, which has been, people look at it and they say 845% in 1 year. Oh my goodness, right? And it hit this new recent high. It's since pulled back. To your point, we were saying it went into the S&P 500. Just a quick thought on a name like this.
Yeah. So I'll say it this way. Anything that's AI driven that's going to change the world for AI are very important ideas for us to look at. Who's ultimately going to be the best players in those particular categories? That's a little bit challenging to figure out. Now, this organization just made the S&P 500. So for index investors, which is most of the world today, saving inside of their 401ks, dollar cost averaging every pay period, they're able to now get a little piece of this when they put in an allocation. So I think that it's going to go up eventually just because of the trend and the fact that it's getting fed.
Right. And look, sometimes when stocks go into the S&P, it's sort of buy on the rumor, sell on the news. And you do have those money managers that sort of mimic those indexes and have to have it exactly. But tech was a little bit out of favor today, though it's come back some. You're also talking about the Google, Apple story as well. I mean, what do you think there? Is they're actually maybe teaming up, right?
Well, as we look at AI, I think it's important to understand we need practical use cases in day-to-day life. The fact that this really powerful AI technology has the ability to do so many things is wonderful, but how is it going to apply to us? And so one of the things that's neat about Apple is, at least, I've got an Apple phone, Apple tools here. I like the fact that at least Apple is trying to do things in a more consumer-friendly way. They're trying to do things that are going to give us some protections. And so that's obviously one of the concerns of AI. So when Apple's talking about integration with different players, it encourages me a little bit because you want to be able to speed up productivity. We're going to need that on the supply side if we're going to be able to really grow through this time frame here. And so this is just one step in the right direction. I think that we're looking for more players to help us with that integration conversation.
And you also have oil on the mind, as we saw it cross 80 and now it's at 83.51. I mean, these are the highs of the year.
Yeah.
Your thoughts?
Yeah, well, we were up, I think yesterday, 17% since December. And so we're trending in the right direction on oil.
Yeah.
I don't see how oil's really going to be dropping at this point in time, especially given the fact that they can be profitable on the per barrel price at a rate that's much lower than this. But as we look at where the world is headed right now, EVs are not as popular as they once were. You know, it almost would seem like a growth story, you know, that the economy is doing so well that oil's up. It's actually really an inflation story because of the Houthis and everything that's going on. We're having to drive all the way around Africa now. That's 3,000 additional nautical miles. That's an inflationary moment. If we understand how oil is playing out here, you know, Warren Buffett thinks that it's one of the better players. It's number 5 and number 6 in his Berkshire holdings
and
right now.
Oxy is one of the names that you like, right?
Yeah, Oxy and Chevron. Those are, you know, as far as the dividend pays, purchases on stock buybacks, but also just their ability in this time frame to, you know, when everyone is slowing down production, they're actually boosting up production. They've got a strategic acquisition that they're making right now. It's going to open up new markets for them, and I think that we're priced in here for a successful run.
We're looking at Occidental Petroleum. It's sort of a choppy chart, right? I mean, there was a lot of excitement surrounding this name, then it pulled back, but you see it's still running back up. Right now, it's around $63. It's up 1% today. When you like these stocks, do you think they have X% potential, like 10% potential, or what?
You know, I think that we're going to be seeing oil above 100. Here's the thing that I would just note is that the United States is able to get oil safer and cleaner than anyone else in the world. Not cheaper, but safer and cleaner. So we happen to be the #1 oil producer in the world by far right now.
Yeah.
We just had a record here in the United States. But, you know, just understand that we do have some rivals here in the BRICS nations with the Saudi Arabia and Russia, and ultimately they are suppressing some of their production. So that lower supply is going to mean a higher demand inside of the market here. And so we think that there's at least a 6-month run in front of this, but it could be, you know, at least a decade, depending on how the EV story goes and where the world's headed.
Yeah, Diamondback Energy as well. Just going into the same theme, right? I mean,
That's right.
Those are 3 energy names that you like. Thank you so much for being with us. I mean, with the S&P at 5166, do you have an idea or focus for between now and the end of the year? Higher, lower? Do you put numbers down?
Okay, so here's my answer to that question, Nicole. I believe that things are going to be pulling back. I think that it would be very interesting to figure out how do we continue to rally from this point forward. So I think things are cooling off. I think that we're going to be at a lower point than we are right now, year end on the S&P, which is why some alternatives are going to be a more effective solution.
All right, David Strasevsky, CEO, Sound Planning Group. Thank you so much for being with us.
Appreciate you. Thank you.
Coming up next, Kevin Horner is standing by. He's going to do a technical breakdown. He's going to look at the S&P 500. He'll take a look at Comcast for us and AMD as well. Stay with us. We'll be right back.
So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours of live programming. We kick off every day bright and early at 8 a.m. Eastern with our Futures Show hosted by Ben Lichtenstein, breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host a watch list, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, the host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the markets. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, and trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Welcome back to the watch list. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. A look at some more movers for you in the market right now. MongoDB is in the red today after a downgrade from Redburn Atlantic and lowering its rating to neutral from sell. Slashing the price target to $295 from $410. The analyst citing rising storage costs and MongoDB's already relatively high price point capping upside for the stock. So you can see that stock on the move right now and sitting at a level of 352. And Nordstrom jumping this morning. Reuters report that Nordstrom founding family is looking to take the company private. A previous attempt to go private failed 6 years ago. The family is reportedly working with Morgan Stanley and Centerview to find prospective private equity buyers. T-Local, this is a fintech company offering cross-border payments, first Uruguay unicorn, and it's falling hard after a mixed fourth quarter earnings report. T-Local also announcing a new CFO. Total payment volume rose 55% year over year. Revenue beat estimates. Earnings per share missed street expectations. Coinbase hit a yearly high only a week ago, continuing its downward slide as Bitcoin prices sank. Other crypto-related stocks are in the same boat as Bitcoin, which hit an all-time high on the 14th, plunging back down. And despite these losses, Coinbase shares are still up nearly 200% over the last year. Here's a look at Bitcoin, right? We were around 75,000 or so. Right now, sitting at this level, 64,830. Okay, it's Technical Tuesday, and we welcome in Kevin Horner, Senior Manager, Trader Services Education at Charles Schwab. Thank you, Kevin Horner, for being here every Tuesday, Technical Tuesday. We're glad you're here. So first up, we're looking at the S&P 500. We're not too far off those all-time highs that we hit recently. Your thoughts?
We are right back there, Nicole. It's a notable move to push us right back into that 5190 level, of course. Traders, look, we've all been for the last 2 weeks wondering whether we're going to break that 5200 level and get some conviction moves to the upside. And ultimately, at this point, I'm not sure that we can actually do so ahead of tomorrow's FOMC announcement and decision. So I think that the opportunity exists for that to be a catalyst for us. But I think that's why we're in this ever shrinking window of price action over the last 2 weeks. We've really been tightening the band of price action, snugging that up between about 5110 at the 20-day moving average and the 5189 prior high we saw about a week and a half to 2 weeks ago. So, it's been consolidating here. Bearish traders have not been given the clue yet. There are all kinds of narratives and underlying forces that bears are continuing to speak to, Nicole, and yet each test of the 20-day, dating all the way back to November, has been a buying opportunity for the bullish trader and bullish investor. Now, eventually we know this will shift and this will change, but bears, one thing we know is that people who tend to get a little ahead of themselves, which is to say positioning bearishly before a breakdown, that tends to be very painful, and it can lead to extended moves to the upside too in the form of short covering. So, we know that this is the potential that's there. If you're feeling negative, feeling bearish, I can understand it. We've been residing at this level a while, but ultimately, if you're trading the trend, Nicole, you're still waiting for something to be different, and we have not seen anything different as it relates to the SPX here.
Yeah, and I get people, I'm hearing so much bullishness, and then it becomes this contrarian indicator. Our last guest said end of year lower than where we are. I mean, we're definitely hearing Now I'm starting to hear a little bit of bearish comments creeping back in. Your thoughts on Comcast? That's a name you're following today.
Yeah, this one popped up for me because one of the notes I've had lately has been how strong communications has been. It's been an excellent return on a year-to-date basis, and Comcast really hasn't participated. What I found intriguing in its chart formation was really a lengthier time frame. The weekly chart really provides a better visual of this long run ascending triangle. And that's exactly what we've got on the screen right here. As you can see, the higher lows that we've seen have been working all the way back to October, not of 23, like the broad markets rally has been, but October of 22 when it found its bottom. So this thing is pushed quite nicely off of those levels. So coming off that October 22 level, we are up more than 40% at this level right now. So while we're off 7% from those recent double top highs that we would love to break through, a trader who is thinking, hey, we're buying along the trend line and we have an opportunity to target those prior highs in the neighborhood of, say, 47, you can certainly tell a story for a bullish trader that says risk versus reward is in their favor if this can challenge that 447 level again. Now, of course, those traders need to be very disciplined in their exit strategies, because moves below the $40 level would pretty much squash any short-term opportunity and would make this trade look a lot less comfortable for a bull. So in the short run, opportunity might be here. If you're more conservative, that trader might look for that breakout first, Nicole, where you're trading through the highs we have seen, which would give a potential for maybe even a more extended move in a longer term time frame, perhaps.
All right. Yeah, thank you for that. I mean, well said. I mean, you give us the different scenarios, which is great. How about AMD?
Well, AMD is popping up on a lot of charts today because it found the 20-day moving average on the intraday low today. Pardon me, the 50-day, not the 20. We've been watching the 20 on Advanced Micro for quite a while. It had been kind of similar to what we've seen out of the NASDAQ 100, for example. A lot of tests in the neighborhood of the 20-day, some violations for 2 closes, maybe third day you're right back up above it. And that's kind of been the case with AMD. Now, today's action was that gap lower move that took it below the prior highs. So we had highs achieved in January, late January, at about 183. Those same highs achieved again in late February, 183. But it wasn't until we broke through that level that we actually got that wonderful pop from 183 all the way to the highs at 227. So a fantastic move. But now all we've done is get thrown back right to that horizontal support area, coincident with the 50-day moving average. So shorter term, if you've been waiting for this, a bull who's been waiting for the opportunity to participate in a strong move in AMD, well, you've got that low risk opportunity for entry. Now, the key to that low risk, Nicole, is always going to be the implementation of an exit strategy below the 50-day moving average that would limit risk to the long side trader here. It's imperative that if you're stepping in, you recognize the need to move on if it's not going to hold the level that you thought you were going to hold.
All right. Thank you for all of that. Kevin Horner, we appreciate you on Technical Tuesday every single week here on Schwab Network. We appreciate that. Kevin Horner, Senior Manager, Trading Services Education on Charles Schwab. Thank you. Okay, coming up next, David Nicholson is at the NVIDIA GTC conference. He's going to give us the very latest, what's been unveiled, how it feels, maybe some inside scoop. In the meantime, Goldman Sachs saying NVIDIA will ride the AI wave to $1,000. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Welcome back to the watch list. I'm Nicole Petalides. We're watching NVIDIA. This GTC conference has everybody in focus on NVIDIA today and yesterday and today. David Nicholson's with us, Chief Research Officer at the Futurum Group. And you've been there, and we've seen the stock going back and forth, but we're getting some breakthrough commentary. How does it feel?
It's kind of overwhelming. Good to see you, Nicole. I have to say, yesterday during Jensen's keynote in particular, it was fascinating to be in such a large room with sort of a concert feel, with everyone being fairly reserved because these are super educated people. This is an industrial sort of conference. This isn't a business to consumer kind of conference. And it was dawning on people that we've really reached an inflection point where everything is changing moving forward. I know there's a lot of hyperbole associated with this, but the announcements yesterday were expected, yet staggering at the same time. Today's all about partners and the partner ecosystem, which is equally as unbelievable because everyone is a partner with NVIDIA at this point. And that's exactly when you start vertically integrating your business and having these kinds of partnerships, there just doesn't seem to be anything that can stop them at this point.
Yeah, I mean, I just finished saying how Goldman Sachs was saying NVIDIA will ride the wave, the AI wave, to $1,000. It's at 900, so 1,000 isn't that far away. We've had price targets much higher. Jensen Huang has noted about reiterating that there is a $100 trillion market of industry that can be transformed with AI. I mean, they're just this addressable market that can just keep growing and growing, right? Tell us more about that, because Kevin Hanks talked about $250 billion per year. Huge, right?
Oh yeah. We're talking about something that moves the needle on global per capita GDP. This isn't just about earnings and margins. This is about transforming. I don't want to sound like a cheerleader here, but seriously, I've been in technology for 35 years. This is fundamentally different. When you talk about reaching the sort of escape velocity with the kind of processing power that Blackwell, the new platform that was announced yesterday, will unleash on the world, you start being able to do things like create perfect digital twins, perfect virtual replicas of the physical world. So you can design and test and deliver incredibly sophisticated products without having to do a physical prototype, because the physical prototype wouldn't be as accurate as the digital twin. We've been doing some of that. We've all seen videos of car design and things like that, wind tunnel tests and all of that. But this goes beyond nuclear explosion simulation type stuff. They're talking about a digital twin for Earth to be able to predict weather on a more granular scale. It's mind-boggling. And yeah, it's hard to overestimate the effect this is going to have on global economies in the future.
Yeah, and just going back to Blackwell specifically, I mean, they're saying they expect Blackwell to be the fastest ramping product of NVIDIA ever, right? And that would be in the history, along with, Amazon, Alphabet, to the partnerships that you're talking about, Meta, Microsoft, among others, that will have Blackwell-based products available starting later this year. I mean, that's right now almost, right?
Yeah. That timing, by the way, is going to be critical when you look at the broader space for AI. And I've said this before. We've talked about this before. AI will serve to lift all semiconductor boats to one degree or another. But NVIDIA came out gently swinging on the subject of training versus inference. Not to get too technical, but inference is the stuff that the AMDs and Intels are seeking to sort of stake out their claim right now on top of. And NVIDIA came out and said, hey, we've got this thing called NIMs, little containers for doing inference stuff. And oh, you know what? You should really call it generation, not inference. In other words, it's all in their wheelhouse. So I'm trying to poke holes in this. I'm trying to figure out what are the headwinds. And the number one thing I can come up with, Nicole, is water and power. Despite Blackwell being more efficient in terms of how much energy is required to complete an individual task, the aggregate power consumption needs exceed our current ability to deliver. So if someone is trying to look at a limit to how big this can get, we're going to be limited by electricity to power these things and water to cool the data centers, which sounds crazy, but it is the reality.
And so at this point now, as someone who's sort of fully immersed in this tech world, and of course this is not just a chip company, it's more than just a chip company, as Jensen Huang said. He said it's an accelerated computing company. You follow all these names. NVIDIA, clearly a leader in your mind, I guess. I mean, you said I don't want to sound like a cheerleader. At the same time, they're announcing things with potential growth that is historical. What names stand out to you in 2024? At the end of the year, what names are we going to be talking about in your mind?
So I'm still really bullish over the year-long plus period of time on companies like Intel and AMD and Broadcom and Qualcomm and Supermicro and the memory manufacturers. They are all going to be lifted by this rising tide. But when we talk about the wave of AI, from a hardware perspective, NVIDIA is the wave. And then outside of that, start looking at the companies, the hyperscale cloud providers where a lot of this is going to live. The AWS's, the Google Cloud Platform, GCP, Microsoft Azure, Oracle, and others. But you have to look alongside that and see that NVIDIA is cultivating their own cloud services provider partner program. And that's fascinating to watch because think of AWS in the delivery space. Were they a boon for the UPSs and the FedExes of the world, or were they disruptive in a way when they start buying their own airplanes and their own trucks? And I think the answer is yes, both. And we're going to see that. So from an investor perspective, keep an eye on the folks who will both be partnering with and competing with NVIDIA. And that's pretty much everyone in the tech sector at this point. So it's going to be a wild ride.
Right. I saw one tweet from a friend of mine saying Jensen Huang telling the media that Blackwell's chip is 30 to 40,000, costs $10 billion to develop. But when asking for clarification from the NVIDIA team, which Blackwell chip Jensen was referring to, the team didn't specify. I don't mean to get in the woods, but is that
right.
in the weeds? But is that something that you're following?
I am, and it wasn't clear to me either. It is interesting because the concept of a GPU. Remember, GPU originally was graphical process, graphics processing unit. And it was supposed to do these sort of side tasks that CPUs weren't good at. So the definition of a GPU and a chip is obviously being recast as we start to interconnect these things so quickly that 2 or 3 or a million all appear to work as one. So Blackwell isn't a chip per se, it is a platform, using their terminology. You don't want to be a product, you want to be a platform. And that Blackwell board that he held up contained what you could call 2 Blackwell chips, along with a Hopper 100 as a CPU. So it's hard to say. What does that mean exactly? Is that board $100,000? But let's also keep in mind that that is just the start of what their selling begins, because it's all the networking, all the interconnecting.
Yeah. Did you see George Lucas, Kendrick Lamar, Ashton Kutcher, Nas, and others?
Oh, we all had lunch together. No, I didn't. I didn't happen to catch them.
David Nicholson.
The hallway conversations are always. I'm a total geek here. I'm trying to figure out like storage companies that are starting to use GPUs in their storage arrays. That's like, that's pure,
good.
By the way.
That's what we want. So, I'm glad you're there to do that and give us the very latest. David Nicholson, Chief Research Officer at the Futurum Group, thank you so much. Still ahead in the second half of the show, we will break down the very latest ETF trends, covering some under-the-radar names you might want to take a look at. Our panel is standing by, and we'll look more into that Apple, Google, AI agreements. I don't know what to call it right there. In the meantime, S&P 500, look at winners and losers.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. All so you can trade brilliantly.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. I'm Nicole Petalidi, coming live from the New York Stock Exchange. Things turned mostly into the green, so we've seen that turnaround. And of course, it's Federal Open Market Committee Day week. Tomorrow's a big day, but the committee is underway, chatting, finding out when they will cut rates. If at all, right? S&P 5173. The Nasdaq is up 0.25%. The Dow is up more than 0.5%. So is the Russell. Ben Lichtenstein is with us for a market update, senior futures contributor. 90 minutes left in the trading day. Ben, what stands out to you?
Yeah, green across the board here today. Nicole, as we head into this Tuesday afternoon session, the first day of that two-day Fed meeting, as you mentioned here, and quite the turnaround in some ways, right? I remember we started off the future show this morning talking about the Nasdaq in negative territory, and we've gone from down around 0.75% to up 0.25%, and just pointed to tech has seen some strength here and regaining composure today as we head into this afternoon session. Let's take a look here, though, at the SPX, the rally we've seen today from 51.31 up to 51.75, and how we're currently
holding these upper levels. But I want to really speak to the strength that we've seen. Look at this intraday rally. I mean, high conviction trade to the upside, bottom left to top right, depending on how you want to look at it. I mean, this 1 minute candle chart, a pretty good indication of how today the bulls are in charge here, Nicole. Let's take a quick look at some of the areas we can kind of map out where the market's just sort of paused and regained composure and then continued on this path, right? You notice here how we've seen, well, most recently, every 10 points, a bit of a area where the market's just kind of, again, just taking a breather here, but again, still a pretty well-defined trend up. And we're holding up near these highs, right? So no rejection of that as of yet. This move, again, a 1 minute candle chart, just to look at some of the price activity we've seen today. But let's take a step back. This is a look all the way back to, we're talking about March of last year. So we're looking at 1 year's worth of one-day candles now. And you can see almost the exact same pattern, right? Bottom left, top right. We're talking about a trend off those March 2023 lows around 3,800 to near 52. We're currently in balance, which means that we're kind of rotational here around this 5150 level. It appears, again, as if the bulls remain in control, right? You see the trend up and you see consolidation here. So we're just pausing, waiting for more information. But you're seeing this across multiple time frames here, Nicole. You're seeing this across multiple products, some of these individual stocks. I mean, again, this is a pretty well-defined trend up here. It's about as easily identifiable as it gets here. So to me, it does look like the bulls remain in charge here. And, you know, I think we're seeing that in terms of the dips, right? They're short-lived. They're bought up right now. And that's characteristic of this move up we've seen off the October last year lows.
Yeah, I was saying, you know, there just seems to be so many bulls. A few bears are starting to step in, but mostly still everybody's very bullish.
Yeah.
And when it came to oil, David Strzeżewski was just on with us. He was thinking about a pullback for the market, but he did think that oil could head above $100. I mean, he gave us some oil stock picks today. He had Occidental Petroleum, Chevron, and Diamondback. But what are you looking at when you see the oil chart? Because we're at the highest levels of the year, basically, of 2024.
Yeah, it is a similar pattern, right? A 4-month high right now, Nicole, and I can understand that expectation that we could see $100. We're on path and on the trajectory for that right now. Let's begin in a similar fashion with an intraday look at some of the price activity we've seen and the rally recently in crude oil above $83, not what the Fed wants to see as they sit down for that two-day meeting, right? We're going back to the price activity we saw middle of last week, trading around 77, but similar pattern, right? You've got well-defined areas of consolidation that are formed at higher and higher levels as we've seen this trajectory to the upside. We're currently bouncing around this 82.75 here. Now, we're really taking out a fine-tooth comb here. We're looking at crude oil through a really through the magnifying lens here, Nicole, with this 5-minute candle chart. So let's not get too married to this move higher here. But I did want to take a look at some of the price activity we've seen as this move up that we've seen, well, over the last couple days has really been building on a move up off the lows from the end of December last year. You can see how we kind of balanced around 72. We invalidated the trend lower we had been seeing off the highs last year up around 95 with this move. So, and we talked about this a while ago, right? Everything above 75 right now, if you've been short this thing, you're kind of just hoping and praying right now. The bulls, again, in this situation in charge. And that's what's so amazing about that stock rally we mentioned, right? It's in the face of a big move here in crude, higher, and a move in the dollar, as well as 10-year yields, right? I mean, so stock bulls here really flexing their muscles here. Crude bulls, though, they're holding their own here as well, I'd have to argue.
All right. Thank you for all of that, Ben Lichtenstein. Great to see you. Good look there at the markets and oil as well. Now let's turn our attention over to some recent ETF trends. Joining me for that, Todd Rosenbluth, head of research at VettaFi. So is the money pouring into the ETFs? I mean, we certainly know that there are some thematic ETFs and people like ETFs. What's been standing out to you?
You're right. It's been a really strong start to 2024 in the ETF industry, particularly with equity ETFs. We've seen strong inflows in February, and it's continued into March. What's caught our eye at VettaFi has been quality ETFs. We've seen ETFs like the iShares MSCI Quality ETF, QUAL. It just saw close to $3 billion of new money come in last week as part of a model allocation change. We've seen strong interest given the earnings consistency, the strong balance sheets of an ETF like QUAL, but we've also seen interest in some of its peers. The second largest quality ETF is SPHQ. That's Invesco's S&P 500 quality ETF. Now, QUAL takes on a little bit more sector exposure, a couple of different factors that are driving it, but those two large ETFs have been in demand. And we also think there's some under the radar ETFs to focus on.
Yeah, and I want to get to the under the radar ones in a moment. Let's stay with this, and thanks for giving me this entryway to just talk about the quality ETFs. You said when you look at earnings that they need to be consistent, a balance sheet. I'm sure you're looking for free cash flow and things like that. How many kinds of names are in these ETFs? How often are these rebalanced? These are some of the key things on a balance sheet that you're really looking for that look good, right?
That's right. So this is a subset. It's probably easier to start with SPHQ because people are familiar with the S&P 500. These are a couple handfuls of names, a subset of that universe, maybe a 1/5 of the overall S&P 500 that you'd find within SPHQ. You're right. Earnings consistency, strong balance sheets, low leverage. Those are things that are all important. And these get rebalanced a couple of times throughout the year on a semi-annual basis, depending upon which ETF. It depends upon what the time period it happens to be. So you get some of the benefits of active management in that the fundamentals are reflected within the portfolio that you have, and you get the benefits of diversification. You were talking earlier about NVIDIA and all the positive trends that are going on. NVIDIA is considered a high quality stock, but it's not alone. There are other companies within the portfolio not as technology oriented. A company like Nike comes to mind that's well represented within these portfolios. Eli Lilly, which is of course doing very well with its weight loss drugs. So you get the benefits of sector diversification within ETF like QUAL or SPHQ.
And then you had some ones that were more under the radar, lesser known quality ETFs. Mention those quickly, and then I have a few more questions for you.
Yeah, so within the traditional quality space, we were highlighting QGRO, QGRO, which is an American Century ETF that takes quality and adds some growth filters onto it. So these aren't just companies with strong balance sheets and strong earnings consistency, but there's positivity in terms of the growth. And you can see QGRO has been performing quite well. A second one that we highlighted in some recent commentary was FQAL, which is a Fidelity Quality Factor ETF. Now, Fidelity is known for active management. The team behind that active management has helped to build the index behind FQAL. Keep wanting to throw a U in there, FQAL, and it's sector neutral. So you get the highest quality companies within each of the sectors. And then there's, of course, some free cash flow ETFs.
Right, I know you had cows on there. Before we run out of time, just anything, Bitcoin thematic, or there's always the double leveraged up and down. But the ones that may be fun for folks, like the names that they should watch, I mentioned Bitcoin because that seems to be hot, but tech or anything else for that matter?
Yeah, so obviously we've seen strong demand in the first couple of months for Bitcoin-related ETFs. IBIT from BlackRock has been very popular. So is Fidelity's ETF, FBTC. And we're also seeing demand for thematic ETFs, artificial intelligence products like THNQ, which is a Robo Global ETF, or BOTZ, which is a Global X ETF. So really strong interest outside of the core for ETF investors.
Yeah, and just quickly, because I got to go, but the Bitcoin ETFs, I know there was a lot of inflow when it first started. Does it seem to be slowing down dramatically? It seems to be the same. I know you don't have the numbers handy, but it seems to be pretty good, steady.
We've seen really strong demand, continually strong inflows. IBIT, FBTC, and Bitcoin's. Yeah. Bitwise's ETF has been quite popular.
Yeah, it's great to see you, Todd. Thank you always, Todd Rosenbluth, Head of Research at Verify. Still ahead, let's bring in our panel to discuss what's going on with Apple, Google, Gemini. Stay tuned.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, Available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to the Watch List. Time now to discuss the breaking news of Monday, and we're continuing that follow through. It's about Apple and Google and a partnership pertaining to Gemini, and I'd like to chat about this with our panel. Jason Ware, CIO, Albion Financial Group, Kevin Riley, Managing Partner, Exponential Investment Partners. Jason, I'll start with you. Were you surprised to hear this news, this partnership with Google's Gemini? Is this what Apple needs? Your thoughts?
Hi, good afternoon, Nicole. Yeah, I was surprised. I think a lot of folks were surprised. I think it's in part why we saw Google's stock pop yesterday. This was unexpected. Look, I mean, Apple has been, pivoting toward AI. There's been a number of signals that Apple has put out, whether it's buying Darwin AI recently, whether it's moving, basically shuttering Project Titan and moving that team and those resources, which was about 10% of their R&D spend, over to AI. And then, of course, they released quietly a white paper that no one's talking about on the Cornell University database, talking about the internal multimodal AI that they're working on. So now having this partnership, or potential partnership, I should say, I want to stress this is just being reported. It hasn't been confirmed. But yeah, a lot of things moving in the right direction as far as Apple focusing more and more on AI. And of course, it's good for Google to partner with Apple for a variety of reasons.
Yeah. So if the partnership seems to have some streamline that would happen, synergies, let's say, Kevin, how likely is it to really go through? We've already sort of heard the inklings of it. Does it seem to be the go-ahead?
Yeah, that's a good question. I mean, like Jason mentioned, I was totally surprised to see this headline hit the wires on Sunday night. I think it took everybody by surprise. So that's what I've been wondering myself. I mean, what is the likelihood that this is actually going to go through? And then you've also got a further complication in the sense that both of these have such massive revenue streams that, how much additional revenue could it generate for Google, let's say? Even if it's $1 billion, $2 billion, who knows? I mean, that's nothing in Google's greater revenue scheme. And conversely, it wouldn't cost Apple probably that much, so it's not going to hurt them too much. But I think as a perception point, it's very valuable to both companies. And I think that's where the real benefit lies. And it almost seems like Apple may have kind of turned finally. It's had a terrible year. It's down 10%, while NASDAQ is up 7% this year. And it almost feels like it might have turned on this news event. But we'll see. It's up $2.75 today. Google had a huge up day yesterday. But, we'll see. Maybe this is the turning point for Apple. I think Google's a little tricky to get into right here because it went down, low 130s. And now we're sitting up at, much, much higher than that, basically at its 12-month price target for Wall Street. So that one's a little trickier. I think Apple's a good play down here, though.
That's interesting. Thank you for bringing that to us. So it's at 176, so it could be a good play here, particularly with the pullback that we've seen, to your point. But maybe this was the catalyst or some sort of news, or just the fact that they're willing to make these kinds of partnerships or do something different than what they've been doing. Jason, when you think about the group, I mean, do you think that Apple and or Google have some upside potential in the stock?
Yeah, we do. And we'll look, to be clear, we're long-term investors, so I don't know where the stocks trade over the short term. But, as we look at Google, for example, I mean, this is still a company that is growing its earnings mid-teens, and it's trading at a multiple that's not that much higher than the S&P 500. It has a low 20s PE multiple. So that's still a great business that you can own at a reasonable price, which is really kind of our niche, is owning good companies that are growing but not overpaying for them. So Google checks that box. And of course, they are one of the leaders in AI. And I think that's why this news is so important. I agree with Kevin. I mean, if you look at the contribution to revenue and profits over the near term, it's not going to move the needle much. I mean, Google's going to do $350 billion in revenue this year. So, you're not going to get more than a couple percentage points of top line out of this if the deal goes through. But what I think it does is Apple, of course, is an extremely important technology company, well-resourced, really smart people in Cupertino. And what they're doing is effectively validating Google's AI if they partner with them. So I think that's a big deal. Apple, real quick, the big knock on Apple over the last several months has been that they don't have an AI strategy. And I think these things, to Kevin's point, shows that they are focused on AI. And I think that can help re-rate the stock going forward.
Yeah, and that was my next question. You set me up for it because, I saw an article in the New York Times saying Apple and Google are discussing a deal to bring generative AI to iPhones. And you have to wonder, why wasn't generative AI in iPhones already happening, right? And that's your point. It just wasn't there, and there was no real AI strategy that was clear to folks. Kevin?
Yeah, I mean, Apple is historically very slow with things like this, and they keep things very quiet. I mean, this could have been in conversations for a year, for all we know, and it was just announced. We just don't know. That's my guess. It probably has been. But as I said, historically, Apple's very quiet about things. They're never first to market, but they like to be best to market. So I think that's probably the case. They've probably been talking about it for a long time, just now feeling a little bit of heat probably because the stock price is down and everybody's saying, well, why isn't Apple talking about AI? Well, I mean, maybe they're finally getting the hint. Maybe this is it.
You know what? Why don't you each give me 10 seconds on NVIDIA because of the big day it is. Kevin, you're talking. Give me 10 seconds.
Well, it's interesting that it sold off yesterday. I bought shares of it at 4 a.m. today, California time. So, yeah, I mean, it makes no sense. I mean, the people are selling it in the aftermarkets when every street analyst goes for $1,000.
Yeah. Jason?
The revenue multiple is too high. It's a $2 trillion market cap. They might do $100 billion in revenue, so they really have to grow into the valuation.
All right, Jason Ware, Albion Financial Group, Kevin Riley, Exponential Investment Partners. Great to see you both. Thank you so very much. That's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with me. Download the Schwab Network app. It's available Apple App Store 24/7, schwabnetwork.com. Market on Close is next.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
I'm Nicole Petalides, live at the New York Stock Exchange. Catch me on Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
every market day.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. All so you can trade brilliantly.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick. You're watching the Schwab Network. Stocks are up. Nice turnaround from this morning. Equities look like they might be in for a world of trouble with NVIDIA down after a big event. But lo and behold, dip buyers arrived. Took a little bit, but they kicked in. You didn't really think NVIDIA was going to stay down all day, did you? Who knows? Thought maybe it might. But this morning was pretty well erased by like noon. So the downside that brought NVIDIA to $850 right after the open turned around pretty sharply, basically, right around breakfast time and kept going. So the NASDAQ now up, S&P's up, Russell 2000, there it is, everything. As we were down about 1% in the NASDAQ at the opening bell. Chip makers are flirting with positive right now. NVIDIA's up 1.5%. It's a really good turnaround, pushing $900 now. The thing with the NVIDIA chart is that you're basically in a kind of pseudo range. So NVIDIA needs to basically get to new highs. And the first step, of course, was holding 850 basically, which was kind of the lower end of this recent range as NVIDIA's gone sideways. Held support, bounced off of it. Literally this morning, I had the chart up, pulled up for NVIDIA. It said $850. That's what's got to hold. And it did. So that's a good little test here of some downside. Now the question is, are we going to get new momentum to the upside to break out and continue the run? It's a little bit more dicey because the whole sector is not exactly ripping back. Chips are firm on the day. It's okay. We got up off the lows, but here's the problem with the broad sector is you still have a pretty clear trend off the highs. Lower lows, lower highs. Obviously, that high coincides with NVIDIA's $974 record. And so the chip makers have been dragged, but today's bounce back in NVIDIA is not pulling up the sector quite the same way because there's a few exceptions. AMD notably is down. Hard to compete with Jensen Huang right now, technologically speaking and just in terms of general swag, Riz, as the kids say. He's got a lot of Riz right now with the leather jacket and the stadium two-day event full of new hardware that he's saying bends what was thought to be possible in physics. Kind of makes sense that his next competitor would be down on the day. And so AMD shares are lower. And you've got Supermicro issuing 2 million shares as well, taking advantage of their big run-up. My takeaway from NVIDIA's event here is that undoubtedly they're hardware is incredible. They are really breaking down barriers of physics. But also, the stock market rally broadly throughout the chip makers makes a little less sense to me now. Sure, there's a pie that's growing, but if they're that dominant as we are to believe, then kind of seems like some might be zero sum along the edges and the margins. So I think that's why the chipmaker group here has got a bit of a higher hurdle to get through as we're making lower lows. That is not happening in NVIDIA. So that's the big, I think, distinction here technically on some of the action after this event. A few other things to note. Bitcoin's still down on the day. It's been risk off throughout the day, trying to hold that 60,000. All these support lines pretty well established. BTC, if you really squint, you can kind of see a brief candle tick a few weeks ago down to 60K, and the way it kind of served as a middle point of the big launch forward here. So if that holds, Bitcoin is in pretty good shape. That's kind of the main thing we're thinking about for BTC right now, as well as its indication of risk-taking appetite generally across the spectrum. Not a coincidence that today started off a little rough with overnight weakness in the crypto markets. They're giving you a little bit of tell. The other thing to keep in mind is that the next 2 days are going to be very macro-centric. Today we're going to be talking a lot of tech still, for sure. There's a lot of AI discussion, including the CEO of a SPAC that kind of came out of nowhere with an AI tech and debuted last week. So we're going to talk about the new companies that are forming around the sector. But then the next 2 days, it's basically all about the Fed, other central banks too, including the Bank of England. It's interesting that you've got bonds pretty well bid today, even as stocks have come back. While crude oil's up, inflation data have been beating expectations. The dots tomorrow should be showing a marginally more hawkish outlook from the Fed, but bonds are pretty well bid ahead of it. Stocks down, bonds bid, and yields down is one thing, but with the stock market now green across the board and the NVIDIA problem resolved, it's interesting that bonds have remained so bid. Maybe an auction that kind of went smoothly today helps add some confidence, but the 10-year yield is basically sitting right at the year-to-date high. So it's probably more a technical thing. Another key level to look at, if we can punch through the 4.3 high of the year for the 10-year tomorrow, that would be a pretty big deal. That's what you're going to want to be watching. We'll talk a little bit of macro here as well, but largely NVIDIA day. Jenny Horn, host of Next Gen, and Mr. Kevin Hanks, host of Fast Market, here with me. Pretty much a tech AI day, Kevin. I mean, the macro, we didn't really have a lot of data this morning. We've got the Fed the next couple days.
Exactly. I thought the turnaround this morning when NVIDIA started to talk about addressable market, that turned everything around. I think the rest of the week it's going to be central banks. I think tomorrow's a big day. Remember, everything that this market did today could be wiped out if these dots go harshly in the wrong direction. So I think there's still a lot of risk out there in terms of what the market perceives about inflation and how Jerome Powell's going to put tomorrow in a frame and talk about it. But all things considered, NVIDIA started the day down. And I think the news that they put out, the addressable market and all the companies using in the total presentation, it turned into like AI Thunderdome. 2 men entered, 1 man left.
Yeah.
And it was not AMD. The fact that you mentioned NVIDIA's up, AMD down, there was a clear winner today.
Yeah, I think that makes sense, frankly.
Yeah.
You know? Supermicro's down. They issued a bunch of shares too. I mean, it does kind of bring up.
That's the right thing for them to do, by the way.
Yeah,
Totally.
It's totally the right call.
Right? I mean,
your stocks of 220% this year, that was the right call.
Going berserk. Got to take advantage of it. What do you think, Jenny? What did we learn here? Because there's still, by the way, it's like day 2 of this event. So, I mean, there are still some headlines flowing through today.
The halo effect, though, has been interesting because it hasn't been as widespread as we typically see. I mean, obviously, we mentioned the weakness in AMD, which has persisted despite the fact that NVIDIA has completely turned around. I mean, just for reference, Kevin, we talked about this at the beginning of your show. It was down 2%.
Yep.
By the beginning of my show at noon, it was up 1%. I mean, that's just ridiculous. And we called it.
Kevin Green messaged just during the show that it was breaking, that they were talking about addressable market. So kudos to him. He was watching and sent it right to us. And sure enough, the stock just turned around and went right up. But you mentioned another thing. It hit 850 and held there.
Yeah. It was like crucial. One tick.
Yeah. AMD, is in the process of holding its 50-day moving average as well if it closes above 177. So there's a couple key areas there.
Yeah.
That M1, what is the M1 300 chip of AMD's? It just looks fairly pedestrian now.
Now?
I mean, yeah, now. Not even I would say comparing to the H100, but now you have a chip that has the capabilities to be 2.5 to 5 times the speed of that. I mean, you're now leagues behind. Not even just, losing the race. You were leagues behind. It is a different race at this point.
Yeah. All right. So then I think we're kind of learning the pecking order here of still what drives the market. NVIDIA's top ranked. I still think it would require some major disruption tomorrow, something extreme for us to be able to see the macro take over. That being said, the fact that this sideways move in NVIDIA the last 2 weeks has happened while we're back at the highs for the yield too, that keeps the conversation open here, Kevin, as to what might drive the market this week.
Early today, you and I talked about, was it the weak market that was making the bond rally? Well,
Right.
the market rallied back and bonds didn't sell off.
Yeah, I know.
So
that's kind of what I'm
maybe
thinking.
we're getting into a little area where bonds have sold off enough ahead of the Fed tomorrow. Remember, the Fed comments tomorrow could change everything. This could be a squaring up of positions, or there's a million dry powder answers for what's going on today. But tomorrow is a big day.
Yeah.
But all that risk is skewed towards this less dovish outcome at this point. I think the worst thing that we could see is the Fed acting too quickly. I think that at this point we're basically completely disregarding that. But the dot plot we keep mentioning. But I just think the concern is we'll see the Fed act too quickly, and that would be a big problem here.
Yeah, they don't want to mess things up when it seems like we're doing pretty well, but then they also don't want to send us to the moon either and reinflate. The thing that's interesting to me about the AI stuff today too is that we really saw, I keep seeing this word kingmaker used, that all these other companies that oftentimes are not leaders of the list got lifted up to the top of the market today. So to some extent, it's a fairly kind of realistic look at who's winning, who's maybe falling further behind. When you've got AMD down and you've got companies like Synopsys, Cadence up, I mean, the market's being pretty specific here and I think kind of smart, Jenny.
So Dell is one that
Dell's
an interesting one. And so I read this note that said, so basically they did call specifically out Michael Dell by name.
Yeah, Jensen Huang did.
Yes, he did. And there was clearly a camaraderie there. I mean, they're obviously friends outside of just that sphere. At least it would appear that way from the conference. But what I saw then was an analyst that was well, Dell was the only company that was called out by name. So it was a really key partnership. But that's not exactly true because they did mention Oracle over and over again. AWS, I mean, Azure, it was not the only one called out by name. I can't think of that's the reason why we're rallying today in Dell shares, but I think it helps that they're one that has a clear relationship as far as the big hardware and server companies go. So I understand that, but that was not the only company that was mentioned, not even close.
Yeah. Kev, last thought?
The Blackwell platform list of companies adopting the Blackwell. AWS, Dell Technologies, Google Alphabet, Meta, Microsoft, OpenAI, Oracle, Tesla, and xAI. Those were the names listed that are already going to adopt this platform.
Wow. All right. Yeah. It seems
Who's
like
who?
they got to have it. The land grab, the gold rush is real, especially with all these big mega cap companies trying to hold on to their market share and don't want to get left behind. Even Apple, as we learned, going to work with Alphabet. So at this point, willing to cross over in between businesses to make sure nobody gets left behind. All right. Thanks, guys. Jenny Horn and Kevin Hinks taking us through some of the AI-related movers. We'll get back to that conversation. Let's keep working in the macro discussion as well. Not to be forgotten, a big week for central banks as the Bank of Japan ended their negative rate policy with a little 10 basis point bump. Axel Merck joins us, President and Chief Investment Officer at Merck Investments. Axel, welcome back to the show. Within all this AI hype, of course, we've got some pretty big central bank moves happening. Bank of Japan getting out of ZERP. Is that like a symbolic moment here for us as economists?
Sure it is. I love the enthusiasm you guys just had on the program. The Fed will change everything. Well, it may change from the glass being half full to the glass being half empty. But let's just take a step back and keep in mind that the Federal Reserve is cooking with salt like the rest of us. They see the same data. And so if they change the dot plots or this or that happens, It's a matter of nuance. It's a matter of perception. Now, does that mean a market that's vulnerable because it's gone to the stratosphere is vulnerable? Absolutely. And so similarly, what we saw in Japan was interesting. The Japanese are getting rid of the yield curve control, except if you read the small print, they reserve the right to manage the yield curve every which way they want to, because and guess what? It was priced in, and the market, the yen sold off rather than rally because it was about as dovish as it could have been. Has the world really changed since yesterday? Not really. I mean, we have to sometimes take a step back and consider that the positioning is super important in all of this. And it really depends on whether you're a short-term or long-term investor, where you want to be in all this.
So far, to your point, the stock market here in the U.S. hasn't cared about higher rates so far in 2024, hasn't really cared about a firm dollar, hasn't cared about us pushing back cuts further and further. But as we do get to the higher range of some of those charts, year-to-date high for the 10-year, do the incremental changes maybe apply a little bit more leverage here?
Well, the way I look at the markets, and as a portfolio manager, I look at it in terms of risk management. By all means, markets can stay irrational longer than you can stay solvent. But when markets go up and up and up, the question I have to ask myself, what could go wrong? I don't have a crystal ball. Nobody does. But are you prepared if the market thinks the glass is half empty? Are you prepared if the Federal Reserve says, hey, what the heck, we can keep rates higher for longer after all because the economy is not slowing down, and we keep that in place as an insurance? Or do they see something we don't see because the small banks have an issue and we've provided them so much protection, but now it's really time to clean them up, and that could create some fireworks. And of course, what the Japanese are doing could also lead some fireworks if the market's overwhelmed what the Bank of Japan is doing. You mentioned the word gold rush in AI before. As you're aware, we do a lot in the gold space, and that's typically this place where people seek for refuge, although that in itself can and is often a very speculative place.
Okay, when you talk about speculation right now, as it pertains to the connection between markets and central banks, do the bankers care? Does Fed and Powell, do they care when now there's a joke crypto token, Jerome Powell, and like dog with hat and stuff? My producers are getting tired of me, but every day I like to pick a new meme coin. I mean, we've got like $1 trillion in crypto that's come back. Do you think this stuff limits central bankers' options when it's clear speculative risk abounds?
Well, ever since Bernanke, central bankers have become micromanagers, which also means they don't like it when the market does things on its own. And so when the digital asset spectrum, they cannot control, at least not well. We've seen, obviously, the Securities and Exchange Commission and other regulators trying to step up, bringing them into the fold of a more regulated environment, and that will happen over time. But the central banks, many, including the Federal Reserve, have a dual mandate, not just in inflation and employment, but also financial stability. And so they try to find their way to exercise their control. One of the things they really don't like is they cannot control anti-money laundering things. Now, obviously, the same concern exists with cash. I'm not suggesting that they should treat this thing any differently, but that means that they'll use the power that they have in coercing financial institutions to bring them into the fold. And of course, new technology is fighting that in some ways. Ultimately, I think the regulators, they will win this out. And we see already with the rise of the digital asset ETFs, that people are veering to these traditional measures because the big boys, so to speak, institutions, they will embrace that rather than the things that are happening in the quote unquote freer, less regulated world. And so it's new technology has scared central bankers before, but they control the quote unquote bazooka, not just on the money supply side of things, but also on the regulatory side of things.
Do you err more generally, if we can kind of divide the risks into two? I know it's not that clean, but generally we've things stay too strong, inflation reignites, or growth risk. If you had to pick a side of that aisle, which one seems like the bigger risk?
Well, if you aren't confused, you haven't been paying attention. You can make both arguments. I trust your guests have made both arguments. I happen to believe this consumer is weakening. The consumer is 2/3 of the economy. I bet on the consumer, which means I bet on the slowdown. Historically, the Fed has always won when they wanted to slow down the economy. Now, that said, many arguments are fair, right? Interest rates aren't all that tight. They've taken off tail risk by providing a patch in the banking system. And of course, there's new innovation coming. And so all of that suggests that, yes, we are humming along. But ultimately, I do think that the consumer is near exhaustion. And we see that with more consumer-based companies having trouble and credit card delinquency, to name but one of the kind of more clear indicators that consumers, you should not bet on them in the coming months, I don't think.
Hey, Axel, as it pertains to the portfolio, you kind of teased earlier, I wanted to come back to it. You've been watching gold miners and precious metal related trades, the way they interact with central bank and rate changes. Tell me what you see as a last kind of actionable idea here.
Well, if you believe in a hard landing, gold and gold miners tend to do well. If you believe in a soft landing, the market is discounting. You often see through in that. What we like in the junior mining space, a space we're very active in, is that the junior mining stocks have been hampered by quote unquote higher for longer at the Fed because they have periodic access needs for funding. And as that is easing and as the Federal Reserve gets easier, there should be a disproportional gain potential there. It's a speculative area of the market, but it's one that we intensely focus on and see many opportunities in.
No Bitcoin miners instead?
No, we like the real money. We like gold.
Yeah. The classic. Well, the real gold. I don't know about money, but it's gold.
Gold is real money.
All right, thanks, Axel. Appreciate your time.
Thank you.
All right, President Chief Investment Officer at Merck Investments, Axel Merck. All right, coming up, a fresh new SPAC riding the AI wave. Debuted last week. We've got the CEO of Brand Engagement Network joining us next. Ticker BNAI.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Trading the trending names every day.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
The AI race is on, and that means some new companies. After a SPAC last week, we've got the CEO joining us from Brand Engagement Network, ticker. With AI in it is really all that matters right now to get the market's attention. Mike Zakarski joins us. He's a CEO at Brand Engagement Network with the AI software. BIN is what you guys call it, right, Mike?
That's right, Oliver. Thank you for having me. I'm really excited to be here.
So tell us about what you guys do, how long you've been around, when did the company form, and what's your guys' main product?
Yeah, absolutely. So the company's been around from 2018, developing conversational AI solutions that we're bringing to market. We are a full stack conversational AI company. We're focused on the automotive and healthcare verticals. And we develop friendly AI assistants in the generative AI space. We're full stack, so we provide a complete solution to customers, front end, middleware, back end. And we're an AI 2.0 company, meaning that our products are something consumers can engage with and experience in the real world. And we're really excited to bring our product to market.
Is this in theory, or do you have customers that are putting your software out there right now with customers? Do you have businesses that are using Ben?
Yeah, so we announced recently first customers and engagements we're working on the pharmacy side. So we have an adherence assistant that is designed to help patients learn about their medications. So really what we're solving for is providing AI solutions that allow consumers to talk to an intelligent assistant, a friendly robot, where the information that it's programmed with is known, it's safe, and it provides the consumer the opportunity to have the conversation on their time. Being online at the pharmacy is not the best place to talk about your medical condition or your medication in front of your friends and neighbors. We provide an alternative place for consumers to have that safe conversation on their time with an AI assistant that's programmed to be safe, programmed to be friendly, empathetic, and really give them the information that they need, complete the task, and provide a real value to the consumer and also to the business that we're working with.
Okay, safe I can definitely see. We've got the visual up here, but I'm not trying to be harsh here, Mike. As far as empathetic, nice goes, I mean, where are the emotions coming from? This looks like a Wii sports character, like metal. What's going on here? Can you get a better animation?
Yeah. Well, there's a lot underneath the hood. So a lot of it comes from natural language processing and being able to extract from what is being said, what is the emotional state of the person who is talking to the technology, and being able to in real time incorporate that into both the animation, how the avatar is acting, but also providing answers that are relevant to what is taking place in that real world situation. So empathy is a real differentiator in terms of creating a human-like AI system, a human-like avatar that you can talk to, get information from, and it's there to help you complete the task, solve your problem.
Okay, I mean, I have trouble describing it as human-like, the avatar, but the language underneath, I could see the argument, right, that if the language technology is what really matters here, where is it being deployed? Like with the pharmacy deal, do I call in? Is this like a replacement to like having to wait for a pharmacist, or is there like a booth where I'm walking up to and talking to the character, or how does it work?
Yeah, absolutely. So a lot of interactions we expect to happen on the mobile device, the privacy of your home or wherever you may be. However, we do have full-size installations where a consumer can go and interact with it. It is able to greet you, talk to you, understand what you're saying, and provide you that information you're looking for. We also incorporate multi-sensor technologies. So we have camera, computer vision enabled. If there are multiple speakers, we're able to understand who is actually speaking. And again, articulate back to the consumer both the information they're looking for, but wrap it in that human-like experience. And it's not necessarily about looking human. It's about feeling human. Do I trust the being that I'm talking to? Am I getting information that I can rely on? Is it solving my problem? That is where we're focused.
Okay, I was watching some of the examples of the use cases online. There's one for an auto dealership. The thing I'm having trouble getting through is that, you know, when I'm going to like CarMax and typing in stuff, when you've got the AI saying, okay, what kind of color are you looking for, what price point, what range, I mean, these are things I can plug into like a pretty standard search query and get back pretty quick. I mean, is this like specifically trying to be a hands-free experience? Is that a big selling point of it? Because like the speed and utility feels like I can get it already.
Well, I think, you know, there are some similarities. I think where we're solving for is allowing people to have a conversation rather than having to click around and filter things and then put in the same information over and over and over again. So it really is to bridge the gap between kind of the interfaces that we're used to, keyboard and mouse, and provide a new type of consumer interface that you can talk to it. It is multimodal. So as you saw on the video, it's both an avatar you can talk to, but there are graphical visual images on the screen at the same time. So rather than having to click on the thing, you could say, I like the one on the right, and then you could book an appointment, go to the dealership, test drive the car, and in a more frictionless way, have a conversation with less friction, do more of the work, have more information on your own time. You're not going to be rushed by the avatar. It's going to take its time, take you through, answer all your questions, and really provide you that customer experience that you're looking for.
Hey, I'm all for getting rid of like the terrible calling stations and stuff that you got to go through with so many apps. The existing AI on a lot of these phone services, you know, the dial-in customer support is just awful. What type of tech, can you give me some details on what it's running on? Like, do you have programmers who are actively maintaining it? Is it running? I mean, did you buy NVIDIA chips, or like, what's the tech behind it, the hardware?
Yeah, absolutely. So, of course, you know, when you think about it, it's full stack. So front end, obviously, is the animation and being able to take input from the consumer. Middleware, we do use LLM, small footprint LLMs. We contain them on our servers. So our solutions actually do work without internet for businesses that are looking for that level of security around these types of products. When we also obviously can run them from our cloud infrastructure and deploy them that way. And, you know, optimize for speed, optimize for latency, optimize for concurrency. We do use GPUs for training. We're being very thoughtful around how do we design an infrastructure so it can scale, but also be cognizant of the bottom line metrics as we go and make sure that we're building a sustainable business as we go forward.
Okay, give me a 30-second description of some of those metrics if you can, real quick. You mentioned you had some new customers. Or have you gotten revenue from them in yet? Are you, I assume pre-profit, obviously, but are we pre-revenue too?
Yeah, so we're certainly working with customers. We announced a few important customers in the pharmacy space. We also have a big partnership with AFG, which is a automotive dealer partner, income development space, and they work with over 1,000 car dealerships already. And we're really focused on whether it's healthcare or whether it's automotive, on consumer experience, CX, but also productivity. Are we helping the existing staff be more productive? Are we taking work off their plate? Are we helping the consumer get what they want? And finally, we're focused on performance. So establishing clear KPIs, making sure our technology stack is configured for the business. It's safe in that we know what data it's been trained on. We build them as individual robots for each business. It's their AI. The data's not going anywhere else. It's not feeding their competitor. It's contained within their stack. And so we're very focused on delivering results for businesses, as well as a safe, business-friendly, business-safe, data-safe solution as a way to think about how to build these types of technologies going forward.
All right. Okay. We will follow along and watch the progress. Michael, thank you for your time.
Thanks so much, Oliver.
Thank you. Michael Zakarsky, CEO at Brand Engagement Network, BNAI. Coming up, got some trades in the tech world and options. A 2 down, a 1 up. Oracle's making it through today, but TSMC and Marvell among the semiconductors still struggling a bit.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Every morning, every trade, always live. Expert earnings analysis, In-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Looks like we might be in for an action close here. NVIDIA losing some of its gusto in the last, well, I guess basically since the show started. Oops. Tom White with me, looking at some options trades in today's action. Marvell and TSM on your list, both still red. Marvell down 3.3%. What you got?
Yeah, down about $20 from its recent 2-year highs. And all those partnerships that you saw that NVIDIA came out with during their AI conference, I didn't see Marvell in there at all. Remember, they make the systems, the build of components, Ethernet switches, routers, digital signal processors, for the data centers. A lot of people compare this to, maybe a mini NVIDIA at this point. But data center segment was the robust part of their last earnings event. Stocks fallen from those levels. Auto, consumer, telecom carriers, enterprise networking, all negative as far as year-over-year growth. So that's not a good sign. It's getting pummeled again today with some other tech names. Argus just raised the price target to $95 earlier this week.
Desperately trying to hold $65.
That's right where it is. Yeah, it is trying to hold on to that. Now, remember, yesterday I came with some unusual option activity where they're out in August buying some call verticals. Now we saw some more flows on the call side in here. Calls volume about 2 times normal daily average volume. One that stuck out to me, traders were buying over 20,000 the April 70 strike calls, average debit of $1.65, so that break even $71.65 for this trader over the next month is 10.5% above the current share price in there. Put call ratio at 0.25. So typically put call ratio is about 0.7, right? So even with the slide in Marvell today, calls are out trading puts by about 4 to 1 basis at this point. But people taking more shots in Marvell, thinking that it's going to rebound off of these lows that we've seen over the last week since it hit those 2-year highs.
Wow. All right. Someone's definitely looking for a turnaround, a break in the trend, to say the least. I mean, this thing peaked right on earnings and has been in trouble since.
Yeah, down 9% this month. Yeah.
All right. How about for TSM, which is down but less?
Yeah, down but less. And I was pretty surprised about this because the infrastructure build out and the chip creation and making from NVIDIA is done mainly by Taiwan Semi. I was, not surprised that we're not seeing any gains in here. It's still up 30% on the year. So it's had a great year. We're still seeing some weakness in NVIDIA. It's relatively flat now. TSM down over 1%. They did come out and said that TSM and Synopsys are going into production with NVIDIA's computational lithography platform to accelerate the manufacturing of all these new chips. So they're going to partner up, expand their footprint with NVIDIA, which is already one of their biggest customers. And we saw some call buyers in here also probably trying to take advantage of this little weakness that we're seeing today. Trader bought 4,000 of the May 135 strike calls. Average debit of about $8 on these, so the break even for this trader at 143 over the next 59 days. It's about 6% above the current share price in there. And if we start seeing, some of these chip names reverse, remember, AMD's getting smacked today. Intel was down, NVIDIA relatively flat. TSM's going to take advantage of that. Now, they did also announce today that Taiwan Semi and Intel have delayed construction at their new facilities in Arizona, just due to the fact that the challenge is bigger than expected, because that's one of the things that Intel's had problems with, is actually building out these new chip-making facilities, the foundry
physically,
business.
the physical demand of it,
Yeah.
right? Literally the capex, the costs
Right.
associated, the sites and everything. Yeah. So pretty optimistic trades here today. Okay, buying dips. Look, I'm not surprised.
Yeah.
Last one in what, Oracle? Yep. Also pretty bullish, right?
Yeah, it bounced off of lows earlier in the session when NVIDIA was sliding, up 22% so far this year, near the all-time high, about 129. This one's been taking advantage of earnings. They reported basically an inline quarter, but they said that guidance was a lot higher than expected. They expect earnings to increase 16% year over year. Sales increased 7% last quarter. So decent numbers out of this one. And they expected some announcement of some partnership, expanding their partnership with NVIDIA. Also, didn't get too many details on that, but it did bounce off of those lows. But we did see some call buyers in here also in the April monthly cycle, so a month out. Trader bought over 10,000 of the 130 strike calls. Average debit of 235 on these, so that break even of 132.35 over the next 31 days. It's only about 3% above the current share price in there, so you don't need a big monster move in this one. But yeah, still sitting near all-time highs on this one, and somebody expecting it to reach new all-time highs, because that all-time high is about 129.37.
All right. Okay, a lot of resilient optimism today. No question about it.
Yep.
Buy the calls, more calls, sell the puts. Okay. And looks like we're going to make it through, but boy, I don't know. 20 minutes left, maybe not. NVIDIA's now only up 0.5%.
Yeah.
We were pushing.
It was just negative about 5 minutes ago, so yeah.
Okay. All right. Thanks, Tom. Coming up, we're going to talk some more about volatility in today's session, but outside of stocks, crypto's been under pressure. Crude oil is rallying. There's some things to talk about. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
All right, let's talk some of the non-stock stuff today. We do have some pretty good action elsewhere, including a crude oil continuing its ascent above $80. Let's do it with Bob Iaccino, founder and chief strategist of Path Trading Partners. Bob, WTI breaking loose here?
Yeah, and it's been, OJ, I haven't talked to you about this in a little while, but I've been long crude oil. I got long crude oil, and it's starting to get into that point of time where, believe it or not, the seasonal strength starts about now. So that's number one. Number two, you're starting to get some optimism about Chinese demand. I personally think it's based off of the idea that the globe is about to get a lot looser in monetary policy, Japan excluded, although it's still very loose. And that could help with exports from China to other countries and help boost their demand a little bit, plus the stimulus they've done already. So, you know, the idea that crude oil was going to stay down here based off of weak demand and that the demand was never going to catch up sort of is contrary to the reflation narrative for the U.S. economy and the global economy in general, which might be pulling the Fed back from as many rate hikes as the market had priced in, at least the 7 they had priced in May of last year when they had it priced in at that point.
You know, the potential for crude to push further from here, even with, you know, we went through this phase where there were cuts from the Saudis and OPEC, but the U.S. kept gushing. So it kind of seems like some of that would kind of work through potentially, you know, kind of both sides of the supply equation. Should we be interpreting this as like pure demand, like China coming back online and U.S. hanging in there?
I mean, slightly, yes. I mean, again, we've talked in the past about the long-term prospects for U.S. supply, which is not good. Medium to long term, it's not good. They haven't been reinvesting in wells. Now, having said that, if you get prices at these levels, somebody like, say, a Diamondback Energy, FANG, does really, really well and might actually start to invest CapEx into new wells. But, you know, you're talking about anywhere from most optimistic 18 months to 3 years before they start to produce. Now, the Saudis, yes, they extended their production cuts, but only recently in the last few days have we seen some of the countries, Iraq specifically, say they would now finally comply with those cuts. They hadn't been complying. The supply had been over what the production limits were set at by OPEC Plus. Obviously, Russia is not going to abide by it. Of course, you have the drone strike, the Ukrainian drone strikes on Russian refineries, which took out about 600,000 barrels a day of production. So when you combine all these things with the idea that economies, specifically the U.S., may be reflating and that China's stimulus will work at some point, I don't know to what level, you're getting this slow sort of this is clearly a melt up that we're seeing here.
Okay, yeah, I was just literally thinking about that reflation, kind of ranking the risks, reflation versus recession, and then just kind of risk appetite too, right? The third one, which is does it just stop for no reason when you're kind of doing what we're doing in risk assets? You know, that can happen, right? You can just kind of blow off a top and then, which kind of brings us to some of the other stuff. Gold under some pressure today. Bitcoin down, outright down. Dollar really firm, even with Bank of Japan trying to play hardball or whatever their version of that is.
The Japan thing was one of my favorite to talk about today. Wolf Richter, who's the founder of Wolf Street, put it best in the story he wrote last night. He said the Bank of Japan keeps making its loosest ever monetary policy slightly less loose in tiny steps at the slowest ever snail's pace. So clearly Japan disappointed the markets, and you saw that reaction in the yen. Gold, on the other hand, down a little bit more than 2% since that $2,203 all-time high. Again, I would argue that's holding in. And I think a lot of people, myself included, think that the Fed should not cut rates, but they will in 2024, even though they shouldn't. So that's going to hold gold somewhere in this upper level, clearly, in my view, above 2,000. But even if it gets below there, you're not talking anywhere south of 1950 in the near future, in my opinion. I'm, of course, long gold from way lower than that. We've been talking about that for about 16 months.
Very nice trade.
Yeah, so I've still got that trade on, rolling the futures and keeping the physical. And then when you talk about something like Bitcoin, specifically crypto in general, it's funny because when you look at Bitcoin, you and I have talked for years about its correlation to the NASDAQ. Jim Bianco had a great chart the other day. You may have seen it, OJ, where he lined up the triple leverage QQQ with Bitcoin, and you couldn't tell the difference.
Oh, yeah.
I mean, you couldn't tell the difference. They were still identical. So it still seems to me to be too correlated to the NASDAQ to be what the true believers think it is. Now, having said that, I think we're in a reflation scenario. And the best performers, if you look at an equity sector backtest, is going to be energy and it's going to be tech. So you're going to see a NASDAQ rally and you're likely to see a Bitcoin rally if I'm right about that.
Okay, good point. I always like the chart work and the thoughts, Bob. Appreciate the macro discussion there. Holding on to the gold, great trade in gold, and we'll be watching the overlay between risk assets, stocks, and BTC. Thanks, Bob, founder, chief strategist, Path Trading Partners. Speaking of crypto in the Bitcoin world, tough day for MicroStrategy. That's our developing story with Renita Young, senior markets correspondent, MSTR, a crypto proxy, whatever you want to call it, as they continue to accumulate coins.
It is. So it's a crypto proxy. Of course, it's sliding along with other crypto-related assets after that Bitcoin all-time high last week, right? They're seeing a little bit of relief, I guess, in some ways, not necessarily good relief. But we also heard that MicroStrategy is boosting its holdings of Bitcoin. It boosted it to about 1% because an SEC filing showed that between March 11th and March 18th, MicroStrategy purchased more than $600 million worth of Bitcoin. The company also announced last week a purchase of more than $800 million worth of Bitcoin, and both of those were mostly financed through the sale of convertible notes. Other companies are doing the same thing now. MicroStrategy holds more than 214,000 tokens, and that started back when Michael Saylor started buying Bitcoin in 2020. He started to buy it as an inflation hedge and an alternative to cash. And so we can see if whether or not they'll continue this trend. We do see this pullback happening in Bitcoin right now, so we'll find out if Michael Saylor decides that it's worth a little bit more.
All right. Yeah, it's moving up their average price of Bitcoin, right?
It is absolutely, because the average price of the total portfolio that MicroStrategy has is around 35,160, but the average price for this latest acquisition is actually 67,382. So that's almost double.
Wow. So they're buying at the highs, pretty much. So obviously the guy's got no shortage of confidence. We figured that out.
Right. It's a vote of confidence in the token as well. They're probably one of those folks who think that it's going to go back.
Oh, he does.
Or up to 100K.
Oh, he thinks it's going to go to, I think, millions.
We'll see. We'll see. I'm not predicting either way.
I'm out, too. All right. Thanks, Renita.
Sure.
MicroStrategy down day, but recovered here as crypto markets have firmed up in the second half of the trading day. Coming up, our big picture panel, don't miss it. We got a great duo taking us to the closing bell here. Stocks looking a little better than they did our last check 10 minutes ago.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
every market day.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
We got a little less than 8 minutes. Stocks are in okay shape here. A nice recovery after it looked like things could have gotten ugly this morning. A lot of risk assets were under pressure. Joining me, Colin Martin's the director and fixed income strategist at the Schwab Center for Financial Research, and Liz Ann Saunders is the chief investment strategist. Great to have you guys here this afternoon. Liz Ann, we had our first kind of like test, of this highly concentrated rally. How'd we hold up?
Yeah, so I think it shows you that there's still money looking to come in and any sign of a dip. But I think the bigger picture, to use the name of our show, and more important story is the continued rotation that's happening under the surface. I think, at the index level, even on resilient days, it doesn't really tell you the full story. You've got to go underneath the index and see some of these really significant rotations amid a lot of churn and just the breakout that's happening at the sector level in terms of moving averages in areas like energy and financials and basic materials. And I think that's a sign of the resilience of the economy because of that cyclical bias to what is performing well.
Yeah, the market here has been able to find some hideouts, even like I noticed a few of these days where NVIDIA slows down, Apple kind of picks up the pace. We've got enough. Our game of musical chairs, at least we've got enough chairs still, even if the music kind of quieted down a little bit. Colin, how about bonds? It looked like maybe this morning they were getting a bid because of risk off, but the bid just extended while stocks came back. So are we like feeling maybe a dovish Fed tomorrow or something?
I don't think so. I think it was really two reasons. The first was likely the Bank of Japan, who hiked rates, but was still somehow dovish about how they did it. So even though they're no longer in negative territory, they basically said, let's rein in expectations a little bit. It's not like this is the start of a long-term hiking cycle. So that led to Japanese yields moving down a little bit lower, and that pulled U.S. yields lower as well. I wouldn't expect a dovish theme tomorrow. If anything, the markets probably aren't priced in for a potential upward revision for the year-end dot plot. I think that's what we're going to be focusing on most. We're not expecting any change in policy, but because this is the meeting where we get updated projections, we're looking to see what the year-end projection is for the Fed funds rate. Coming into the year, as of last December, the median projection was 3 cuts this year, and there's some speculation, a possibility that could be revised to just 2 cuts. Mm-hmm. The bar is somewhat high. We need to see 2 officials do that. But given that right now, meaning today and as we approach the close, the market expectations are for 3 cuts. So if that were to change, we got a revision tomorrow where they raise their year-end rate. That could pull up yields a little bit tomorrow because I don't think the market's necessarily priced for that.
Okay. And as we kind of joked last time, if, we know it's going to at least stay at 3 or maybe move to 2. If it goes to 4, then there's going to be outrage. Riots in the streets is, I think, my joke. Liz Ann, how does that connect to the stock situation where cyclical kind of breadth is trying to wake up? If the Fed gets more hawkish, I mean, that's usually not great for those sectors, is it?
Well, I think it's not so much at the sector level that you're seeing a tight correlation in an inverse way between yields and stock market behavior. Of course, last year, the S&P just at the index level was almost perfectly negatively correlated to yields. It explained the correction in stocks from late July to late October because of the spike in yields and vice versa once yields started to come down. But now if you look at correlations, there's less clarity on the correlation at the index level to an index like the S&P or even the NASDAQ. But where you are still seeing a pretty tight negative correlation is down the cap spectrum. So that's where there is that sort of leverage on the downside, but risk on the upside in terms of yields is down the cap spectrum into the less well-capitalized companies, capturing the zombie type companies. So I think that's where you're seeing movement within the market tied to these moves in yields. You wouldn't necessarily pick it up by just looking at the index level of say, the S&P.
Okay. All right. Now, when we look at the big potential here for surprise, Colin, it seems like then our surprise would be like a big recessionary event that causes the Fed to skew super hard to the downside. I mean, it seems like most of our conversation, if we kind of go like 1/3, 2/3, 2/3 of it is generally like a stable to maybe kind of reflating category.
Well, if we're looking at surprises right now, and as we look at the next meeting or two, I'd say a surprise to the downside in terms of Fed funds rate, meaning a downside surprise to the economy. That's really not our expectation, and that would be such a shift relative to what we're seeing right now that I think if we're looking at two outcomes here in terms of hawkish or dovish, I think the theme has to lean hawkish. And the Fed will discuss the idea of being patient and taking a thoughtful and gradual approach to the potential rate cuts because we're not even there just yet. So as you mentioned before, are we looking at a revision to 2 cuts this year or 4? The idea of 4, I'd say that's not even being tossed around right now. And as it stands, the economy still continues to move along. And the Fed wants to see how its aggressive pace of rate hikes are feeding into the overall economy. We've seen parts of it slow down, as Lizanne talks about a lot. We're seeing these rolling recessions, but a good part of the economy is still holding up relatively well. So when you think about the idea of a recession and what will that do to Fed policy, as it stands in the here and now, and as it relates to tomorrow's meeting and even next month's, that's not really something that's on our radar right now.
Okay. Hey, Lizanne, kind of a big question for less than a minute, but I wanted to get a quick thought from you on kind of the symbolic nature of the end of the ZIRP period, or negative, I should say, technically not ZIRP.
I think that's what was notable about the move by Japan. It was less on the magnitude and what it might mean for their economy or their inflation data, but I think there is that end of that era, and there's a psychological component to it. And I think the general realization now across the globe among central banks is that hopefully that era stays in the rearview mirror, because there were arguably as many negative consequences of being either in ZIRP or NIRP as there were positive.
All right, thanks so much. Great stuff, guys. Really good making the connection here across bonds, the equities. Lizanne Saunders and Colin Martin. We've got 30 seconds till the bell. Maybe we just take it through here as NVIDIA's been fighting. We do have green across the board. Equities are higher. S&Ps add about 0.5% on the day. We'll be right back.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network. Okay, nice recovery. They really landed it there. The tech bulls that pushed NVIDIA up by 1% after it was down 4%. Looked like maybe we were seeing some dark times ahead of us this morning with the little slippage in our hero NVIDIA, but it's back. And it added $9.50 to its price, ending at $8.94 and change. Semiconductors as a whole could not turn around all the way, though. Bit of a message perhaps about NVIDIA's dominance and who might be losing market share to Jensen Huang's big breakthrough products. But that was the story of the day. Tomorrow, it's going to skew back towards the Fed, bonds, and more, as we've been talking about. But let's take a look at a few other items, too. They're on the agenda. Nicole Petalides is with me, host of the Watch List and Trading 360, and Kevin Green, our senior markets correspondent, alongside her. All right, Nicole, we stuck the landing. Pretty nice little turnaround here today.
Yeah, look, I mean, as we were looking at a record close, I'm not sure if we actually closed there, but I will say that the options market started to back off a little bit from the bullish trades. And, as we were talking about the contrarian indicators, there were bulls everywhere last week. Starting to hear a little bit of pullback and concern this week. I'm also excited to, right out of the gate, let's talk about Reddit.
Yeah.
Right? We'll have that pricing. And so that pricing will be tomorrow night. And then Thursday is the big day. But this, I feel like we need music like Nokia comes in here on the umpteenth hour here and now is doing a challenge, sending a letter to Reddit. And this is about intellectual property, about the AI-related uses, the deals that they have, the way that they share third-party information and these licenses. This is not what Reddit needed 48 hours before an IPO. So they have to deal with this patent dispute from Nokia ahead of this highly anticipated IPO. I did tell you it's going right behind me over to GTS. Glenn, you may know him. He gets a lot of the really big IPOs. It's expected to be $6.5 billion instead of $10 billion, which was originally. But will it be a Rivian? Will it be a Beyond Meat? Will there, because it's oversubscribed 4 to 5 times in there, which will probably guarantee that $31 to $34 price of that IPO, and that's what people say. But then, does it tank later? So that's the question. So there you go. I'm going to leave it right there. But those are some of the big.
No, I think it's actually
topics.
a big deal this week. It could have easily gone overlooked, because I got my mind on the Fed, we got Nvidia, but I think this is actually a big event because we're in the middle of like this round 2 reincarnation of the COVID meme trade, and then boom, comes along some SPAC mania again, a little taste of it. Our AI guy today we had on, it seems like a real early start business. Who knows what it could become, but it's near pre-revenue basically. So, Reddit is embodying a lot of that kind of madness.
Yeah. It's a big deal. It's social media, it's tech. To your point, I think there's a lot of excitement around this one. Yeah, but apparently with a high profile, as they become more high profile, they say they're going to get more of these. But the story is Reddit's coming to NYSE this week, and we'll be here to cover it, and I'm really excited.
All right. Interesting defense to say, all right, get more high profile, people are going to come after us. I don't know, they've been big for a while. Quick thought on that, KG? Think Reddit's going to make a splash?
I think we'll definitely have a lot of media hype around it. And, usually when we see these IPOs, after 3-4 weeks, we stop talking about them until they actually make a move to the upside or downside. So I think it's a good sign that the IPO market is starting to thaw here a little bit. But, once again, when you're talking about, being pre-profitable or not being profitable at this point in time, it's always an uphill battle when you have an IPO to be able to come out the gate very strong and be able to stay positive, at least for the 3 months. Usually there's a little bit of a shakeout period, and then they start to either gain steam or they start to fall off. So I'm excited about it just because it's showing that some activities being done within the investment banking community, and we'll see how it's going to be able to perform here in the near term.
Okay. All right. You were watching crude oil and commodities. Let's talk about that, Kevin, because WTI is an ongoing story. As we were talking about with Bob, he says it's basically broken free already.
It has definitely made a move to the upside. I would say breaking out of that $80 level is, let's say, breaking free for now. I think there's going to be a very key area at the $83.33 area, which is going to be the 100-week moving average. And if you look at it in the past, I don't have a chart here today, but if you look at it in the past, it has been a critical area of support and resistance over the last 5 years. So I think that's the next hurdle for crude bulls to really try to overcome here. And then I think it's going to probably stay within a range between $80 to $85. I heard some commentary earlier about maybe crude hitting $100. You're going to have a geopolitical type of catalyst in order to be able to make that move, because I think a lot of these energy companies right now, Oliver, have been very nimble and flexible when it comes to their production schedule. And I think that's really going underestimated, but it's a nice run to the upside. It can continue to see some positive flows. And if you're looking at the net speculative positioning, especially when you're looking at managed money, there's still some room to the upside there. Crack spreads are still profitable. Everybody's talking about it, though, and I always get a little bit nervous once everybody starts to talk about how long it can last. As you see in that chart there, that's actually that net speculative positioning. We saw that same spike in July. You and I talked about it at a conference last year. We're kind of starting to hit that same type of wave when it comes to crude. So can it move higher? For sure it could. How long is it going to last there, and can it sustain? I think 80 to 85 is a sustainable level that people need to be keeping their eye on, at least for the near term.
All right, so we're just kind of moving stepwise up the ladder, establishing new ranges. that hold for crude, maybe not the explosive activity from like the COVID era in post, but like normalizing to a higher level. Who knows? Maybe like interest rates will normalize to a higher level, right? Those things might be connected. One other story, Nicole, we talked about earlier that I wanted to circle back on. We talked this morning about George Lucas supporting Bob Iger at Disney. We got more news from Disney throughout the day on getting some more streaming rights to some stuff. Is that right?
Yeah, I mean, George Lucas has 4 billion reasons and 37 million Disney shares he was given to support Bob Iger. But I'm joking. I think he definitely is on board. He was relieved when Iger came back. He said that the board needs to have a lot of talent, and it's not so easy to create magic, right? It's not so easy. In the meantime, big news for Disney here, expanding the college football playoff deal. And there's multiple facets to this, but what it does is it fends off Fox. Fox was also a suitor, and that's a big deal. Disney keeps its exclusive rights to CFP, right? College Football Playoff. So this is a 6-year extension. It's worth $7.8 billion. Disney put aside $9 billion this year to try to make sure that they keep the things that they want the most. That included NCAA rights. That was $750 million in January. And this was $7.8 billion to do this extension. And these are exclusive worldwide rights. And this goes to the year 2031-32 season. Where will you be then? And I will tell you, it gives them more for sales, for sponsorships. I heard from at least one person, maybe they'll be able to subsidize out to other networks. I know some of these games will then be also on ABC, and they'll be mega covered on ESPN. And do you know that college football is among the most highly streamed things ever on ESPN?
Even though I don't watch, I know it is. Where George Lucas says it takes magic.
It is.
I mean, that is the magic, right? I mean, sports, as we've seen all the data tell us, is the golden goose. You got to have one under you. Hey, KG, got a thought on streaming real quick, and we close it out.
I'm right there with you. If you have the sports, you're able to generate the ad dollars, and I think that's going to be a very important thing, especially when it comes to Disney. I think the only big risk out there moving forward is going to be the NBA. If these teams are able to privatize their content, it might be a little bit more difficult to be able to get the rights for a lot of these basketball games, and I think that's going to be farther down the road. Something that's starting to kind of, you're starting to hear some chatter around, but I'm not sure if it's going to be solidified for some of the major markets yet.
Okay. All right. Great stuff, team. Thank you very much. Kevin Green, Nicole Petalides. All right, with some of the overlooked stories of the day here. Speaking of, the overlooked stock of the day is maybe for the last year or two, an AI winner, a blast from the past. George Tillis is going to auto-tune us a take of Sound Hound next.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
no place like the New York Stock Exchange. We've got you covered. The biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalides, 2 p.m. Eastern on Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. All so you can trade brilliantly.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Unexpected winners of the AI boom. Should SoundHound be in that category? George Tillis, our senior markets correspondent, taking a look at the old school early, really the first mover of music identification that I guess does kind of fit into this, George. I mean, you know, we're making all these big breakthroughs with this AI stuff on music. SoundHound's probably, I guess, going to be able to work that into their product, or what?
I think so. I mean, it's all interesting technologies. I'm learning as we go, also, OJ. But you know, SoundHound is essentially, you know, AI-based music, but also independent voice-activated artificial intelligence, things like text, speech-to-text recognition, which again is all part of this enhanced productivity that artificial intelligence is essentially bringing to the marketplace, to society, for that matter. But you know, it's been an interesting company, to say the least. I mean, if you look at the stock, it essentially over the last 3 years has increased by 4x. And in fact, most of it's actually been this last year, considering the stock IPO'd back in April of 2022. Overall, it's been one of these sort of smaller cap names, or it was a smaller cap name, that's associated with artificial intelligence. And it's gotten a boost, especially in the past, you know, 35 to 40 days or so, because you know, of NVIDIA. NVIDIA actually took a small stake in the company, about 4 million shares, 4 million, forgive me, dollars. So it's actually a small amount considering the market cap of around $2.5 billion. But at the same time, SoftBank declared also an ownership stake of 1.1 million shares. Now, that's a lot of shares, but if you look at the stock price and of course the number of shares, which is around 255 million, it's a small stake for SoftBank. So nonetheless, there's obviously some institutional interest in this particular name. And there's also some fundamentals that back it. If you do consider that the company's growth rates in the last year, and if you go back last quarter, it was about 85% year over year. For the full year of 2023, they generated growth around 49%, with the estimates still growing around 40% on a forward basis. But the market capitalization has increased significantly to about $2.5 billion. And again, last year's sales total was about 45 million. So one, it's an interesting company. I think their technology is going to be in high demand. You have to think about competition. Amazon, Google is a couple of competitors in this particular space. But the company itself is also not profitable on an adjusted basis as well. They lost 91 million on about 45 million in sales last year. So it's about 2 times sales, but they do have about 95 million in cash. And effectively, what I did also is a lot of times you want to look at institutional ownership and insider ownership. What I found that was actually interesting and actually quite good is that insiders only own about 20%. If it was a lot higher than that, I'd be a little bit more suspicious. Institutions have about 23%. So about 57% of the float is owned by retail, and retail, as we know, is quite fickle if stock prices tend to move in either direction. In other words, they'll bid it up quite aggressively, but also at the same time, they'll all run to the exit if we start to see a sell-off.
Okay. Yeah, this one is tricky for me because I absolutely sympathize with the notion of the audio AI as being one of the earliest areas for efficiencies, adoption. I've been a big voice-to-text guy for like 6-7 years, to somewhat of the chagrin of my text recipients. but also just the way I use my phone. And I've always found it to be low-hanging fruit. And it seems even places like Apple have fallen way behind. So if SoundHound can find a way to take their existing tech and adapt it, I mean, who knows what they might be able to sell into or product to create, because they should be pretty, established already on a lot of their technology.
Well, yeah, I think the technology is going to become ubiquitous at the end of the day.
Right.
The question is,
But right now,
looking
it's
at
not.
price.
So if they got something extra good, we may sell it to Apple, an app or something, because now Apple's got to use Alphabet because they can't even do it as well.
Yeah, well, I was going to say, I mean, interesting enough, everyone's going after Apple because they don't have their own AI, but my suggestion is they don't need it. They can actually, because of their ecosystem, adopt multiple suppliers of AI technologies within their app ecosystem. So maybe that's the strategy they're taking. I can't say for sure, but again, they could certainly adopt technology, voice recognition-based technologies that SoundHound offers. I'm not saying it's going to be the case. I'm just speculating. But I think the situation for the company itself is there's been a massive, obviously, inflation in the underlying stock price. The market cap was less than $500 million not too long ago. Now it's $2.5 billion. Questions are, is it getting a little ahead of itself on a contingency basis, contingent upon their earnings, which they're still expected to lose about 37 cents for this year and about 20 cents going into 2025. So that's something you have to keep in mind. But the other thing is, from a technical standpoint, looking at the weekly chart, it broke out of the July level, which was around 5. So when there's a breakout, I usually look for that market measured move, which is about that distance from 0 to 5, 5 to 10. It hit 10, and it seemed to stop at that level.
Okay. All right. Interesting move. It's a dramatic one for sure. Thanks, George Tillis. I think there's some real connections here into what's happening. So we'll see what kind of products they come up with. Appreciate it, GT. Excellent work on the overlooked stock. When we come back, let's cut the cord. I got 3 charts for you, 3 risks, and I'm going to rank them. Be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
NVIDIA stuck the landing today. Nicely done. Bull swooped in and took advantage of a rare dip. We held that 850, and now tomorrow we deal with the Fed. We've got a pretty busy week. Still Reddit IPO 2 to test consumer appetite and risk-taking appetite in markets. But I want to highlight 3 general broad risks as we think about the Fed tomorrow. Nothing's changed on my risk radar. The trends have still held in there. we have gotten a little bit more chop in the last couple weeks than we did the previous couple months in 2024. That's where things get interesting right now. It's worth thinking about risks because today when NVIDIA was slipping, nobody knew what that could turn into. When you have such high concentration in the market, that's basically the number one risk. And the number one risk right now, if you think about three categories of risk. The first one is risk appetite itself. When does the musical chairs music end, or does it? At some point, you probably get some kind of blow off top when markets get this frothy. The second is reflation risk, and the third is recession risk. The bottom two is what we spent a lot of the time the past year in generally kind of debating around the Fed. But firstly, let's look at the risk-taking appetite. NVIDIA holding where it needed to hold. Want to watch crypto and the Bitcoin trade very closely as well for gauging risk appetite. The altcoins have rallied just as much as Bitcoin. This is not an ETF story anymore. Maybe it turned on the spotlight, but the same bugs ran to the light and they bought everything up again equal amounts. Crypto's about risk. NVIDIA, obviously a very different type of risk because they have earnings and they're changing the world. But chart-wise right now in the moment, they don't look that different. This is just going back the last 30 days. NVIDIA needs to hold $850. That's your support level held today to the T. Bitcoin toying with low 60s. That needs to stay above 60, I think, to give off that signal of risk positivity. Thinking about reflation versus recession tomorrow for the Fed. Right now, the risks have tilted back towards reflation because of all the inflation data. This was not hard to figure out. The Fed cannot get more dovish tomorrow. If they do, I give up. I give up. They can't put 4 cuts. Right now, there's 3. And maybe they could keep it at 3. That would be a dovish surprise. The expectation generally they're going to move that to 2 cuts or possibly fewer. I would think it might be time to start talking about even fewer. Like maybe dangle 1 out there and surprise us in a good way if you make it to cut twice for good reason. Why not just play a little hardball here when risk assets are this elevated and inflation data has been this hot? Lastly, on the recession side, as our data have held in, it's just not the top concern right now. Of course, there are such things as black swans, but don't know what they are or where they would come from. So all we can do is really watch what's in front of us. And what's in front of us right now centers around regional banks. Conveniently, regional banks are closely related to rates. And what we've seen in the past is that if rates go up, regional banks don't like it. This is where things connect tomorrow. You want to watch to see how regional banks trade if yields go up. If yields go down, regional banks are probably going to be fine. But 47, basically the level on KRE. You can see that we've got a pretty well-established support line there. So that's what you're dealing with. Have a great night. Thank you for tuning in. I'll see you tomorrow for Fed Day. So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours of live programming. We kick off every day bright and early at 8 a.m. Eastern with our Futures Show hosted by Ben Lichtenstein, breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host a watch list, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, the host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the markets. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, and trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you